Welcome to the European market open, everyone. A minute to go until the start of cash equity trading. I'm Francine Lacqua here in Paris, Tom McKenzie in London. Now, here are your top stories. Fed Chair Jay Powell hardens his hawkish pivot, signaling 2 or more 50 basis point rate hikes to cool demand. European equity futures drop ahead of the open. The final showdown, Macron and Le Pen face off on Sunday to determine who will helm Europe's second largest economy for the next 5 years. Plus, lining up the money, Elon Musk secures billions from Wall Street in his bid for Twitter and pledges $21 billion of his own wealth. He also pledges to kick off the bots of Twitter, which is not a bad thing, Tom, but how are futures looking?
Yeah, futures are not looking pretty this Friday morning, taking, of course, into account what happened in the US. The earnings picture remains pretty solid. About 80% of the S&P 500 companies that are reported have come in with earnings that have beat expectations. But overshadowing all of that, of course, is the focus on an increasingly hawkish stance from the central banks, particularly, of course, what we heard from Jay Powell, putting 50 basis points firmly on the table, as we said in those headlines, for May. And the market's now pricing in 50 basis points, May, June, and July as well, almost certainly for the third in July as well, but certainly May and June. Nomura even coming out and putting 75 basis points on the table. Let's look at how things are opening in the first few seconds of this Friday session here in a minute. The Spanish IBEX is down 1.3% or 119 points. The FTSE 100 lower by 1%. You're seeing the consumer confidence gauges out of the UK falling to the lowest level since 2008. The cost of living crisis, inflation really impacting consumer sentiment here in the UK, and a challenge politically for Boris Johnson, who has his own issues to contend with when it heads up to those May elections. We're, of course, focused on what's happening in France. We'll get back to that. Of course, Francine is on the ground ahead of those final votes, the final vote on Sunday, and that contention between Emmanuel Macron, of course, and Marine Le Pen. The Italian FTSE is down 1.4%. Let's move on and see how things are squaring up as we look ahead to the US futures as well, after losses of between 1.5% and 2% stateside. On that run up in yields, particularly at the front end, the 2-year, you saw a move of about 11 basis points. Today it's more subdued, I should say, at 2.69 for US 2-year. You're up just 1 basis point. But again, within the context that you saw an increase of 11 basis points at the front end of the curve yesterday. But across the curve, you saw an increase, but most pronounced in the 2-year. The future stateside pointing range bound after the heavier losses that we saw stateside yesterday. In terms of how this reflects across the European space, not much movement around the German 2-year bond, currently positive by about 20 basis points. Euro dollar remains in focus for us, range bound 108. But of course, we've heard commentary from the ECB as well, officials there turning more hawkish as well and starting to reflect the views within the markets that you're going to get a hike towards the second half of the year. Let's switch it on and have a look at one of the terminals that really puts into context what's happening when it comes to French equities, the CAC 40, the discount that you're seeing now in French equities. Forward PE, on a forward PE ratio, you're looking at about 12.5 times for the CAC 40. That is a discount of about 10% compared to the benchmark, the European stocks generally. A lot of this, Bloomberg Intelligence is arguing, is down to concern and a bit of pricing around risks around Marine Le Pen. Of course, the poll suggests that Macron is going to clinch it on Sunday. But of course, we're not going to know the result until Sunday evening. So there could be a re-rating of French stocks if that result goes the way that the markets want it, which of course is that the incumbent wins. We continue to see that, but there is a discount now in French equities on the back of some of this political risk. And Francine, you are on the ground in Paris for us, passing the latest. And of course, the polling, as I say, suggests that Macron is going to get it. But of course, there are still a lot of uncertainties as we count down to that final vote.
Yeah, there are a lot of uncertainties. Now, the discount is interesting, Tom, because there's a school of thought that says yes, because there's a small, very small probability that Marine Le Pen wins. If you look at the polls, of course, they've been widening. And if you look at what Emmanuel Macron has been polling at, he's around 56%. Yes, it's not a huge majority, but certainly it's a 12 percentage point increase since April 10th. Now, the other school of thought is that even if Emmanuel Macron wins, then the third round, as they call it, is actually the parliamentary election in June. And if he doesn't get a majority, then it'll be very difficult to govern or push reforms through. And so there are a lot of question marks about exactly what that means for the French economy and markets. So it's central banks, though, today driving markets with their response to the ongoing inflation and the increasingly hawkish pivot from the Fed Chair Jay Powell speaking yesterday about his support for further aggressive tightening, while ECB President Christine Lagarde also favored tackling inflation in a, quote, gradual way.
I would say that 50 basis points will be on the table for the May meeting. The big issue that we're very focused on is inflation and getting inflation back down to our 2% goal.
Our inflation is fueled by a supply shock, which calls for a particular type of response, which brings together fiscal policies and monetary policy. It is supply-driven, number one, and it needs to be addressed in a sequential, flexible, gradual way.
It's too hot. You know, it's unsustainably hot, but notwithstanding that, it's a very, very good labor market for workers.
Let's get into the key market drivers with our markets editor, Christine Aquino, and with me here in Paris, braving the sun and the Eiffel Tower views, Ludovic Subran. He's Allianz chief economist. Christine, let's start with you. Bonjour. I've been dying to say it in the Emily in Paris accent. So the hawk parade, central bank hawks, seem to be gaining more credibility in the markets. I mean, I don't know what's changed that now suddenly it's like hawk, 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 and, you know, the Fed are going to be much more pugnacious.
Absolutely, Francine. I think it really is just driving home the message finally to markets that this is happening in a big way, and this is happening globally. It's not just the Fed anymore that's kind of being pushed really into this hawkish pivot. The ECB is joining the fray as well. And again, yesterday, the BOE also getting pushed into that pivot as well. I think what's really notable over the past week or so is that we're not just hearing from, you know, your traditional hawks, Bullard at the Fed and a couple of governing council members at the ECB. We are actually hearing the hawkish message also from some of the more centrist policymakers that have been previously more measured in their comments, but are now saying that they really need to act and they really need to deliver those rate hikes, perhaps more rate hikes and faster rate hikes than markets are expecting.
Christine, let's also get straight to Ludovic. Bonjour to you as well, Ludovic. When you look at the markets and what they're doing and repricing, I mean, suddenly central banks are much more hawkish than we thought, 2 weeks ago. What's happened?
You know, I think it's very interesting because this hawkish pivot started in January, but what is happening now is that the fear of not being able to tame inflation is everywhere. Interestingly, there are more worries about not being able to tame inflation than to cause a recession.
Right.
Which I think is the new thing in the past 2 weeks.
So they're behind the curve.
They are totally behind the curve. But what I'm surprised about is that they don't use the full toolbox. In the US, for example, you could use trade policy to lower tariffs and make sure that you don't have imported inflation. In Europe, there are many things that could be done also to avoid having to hike too fast. But it's true that this change of heart is really because, I think there is credibility at stake. There is also the idea that the cost of living crisis is a self-fulfilling phenomenon. And so if central banks were not to act now, the other policymakers, the ministers of finance of this world, or the presidents or the prime ministers will be in a very difficult situation 3 months, 6 months down the road.
Okay, so that's the conundrum for the ECB and the Federal Reserve. Christine, let's bring you back at this point, because the focus on China as well should not be underplayed because of the conundrum that they face, given the lockdowns, COVID-0, and the markets there just continuing to feel the pressure. You're seeing outflows as well when it comes to bond investment into the Chinese market, and of course, the fact that they're going to need to step up support for the economy. At the moment, it doesn't seem like there's much opportunity to get back into Chinese stocks. At least that is the view from many. What is your take?
Absolutely, Tom. I think that is very much a difficult situation. If you're an investor kind of thinking about getting into China at the moment, it's hard to kind of see the positives even 3, 6, or 12 months down the road, as long as we're persisting in this sort of slower economic growth and lockdown situation. And that's really kind of this negative feedback loop that's continuing over there. And, you know, it helps that the PBOC and the Chinese government in general is really indicating support, showing that support by various measures to support the economy. And, you know, we saw today, for instance, the Chinese authorities coming in to support the stock market and encouraging investors to buy. But until that macro picture really changes or just shows a bit more positivity, it's really difficult to convince investors that the bottom is here right now and it's time to buy. I think it's going to take a little bit more of some improvement in either the data or the lockdown situation to actually convince investors.
Ludovic, how much clarity do you have in terms of the outlook for the Chinese economy and how that maps on to the outlook for the Eurozone, which of course is already facing its own downgrades as a result of what's happening in Ukraine and Russia?
Well, it's a good question. We just revised our forecast down for China, for the Chinese economy, on the back of the 25% of the population being in lockdown. But what is interesting is the imported inflation in Europe. Europe imports 60% more inflation from the Chinese lockdown than the US. So as a result, already we have half a point of inflation that could be coming just from this Chinese lockdown on input prices. As you know, we had producer prices in Italy or Germany going up 20-25%. So this is really the cost of the Chinese lockdown on the European economy, and it's stronger than in the US. And so this is adding a bit to the pressure on the monetary policy normalization, but also on the margins pressure. We see profitability in some sectors like the automotive sector and also scarcity economics starting to kick in.
But suddenly, Ludovic, I mean, we're not looking at a supply shock inflation then, so it's difficult to look through it, right? Again, was that a mistake from central banks? I don't want to be too hard on central banks.
No, you know what? I don't think so. I think they have to pace their way out of this, whatever it takes. I think in the US it could have started a bit earlier. I think, interestingly, the war in Ukraine is not changing the hawkishness that central banks have started to price in at the beginning of the year. I would still be cautious. You know, the Fed can still hike the US into recession. In Europe, should the ECB act a bit too fast, the cost for financial fragmentation, the cost for Italian financial stress is still there. There is no Italexit anymore, but we're talking about a very strong, financial stress that could pop up because of the ECB going a bit too fast in as Christine Lagarde just said, in a supply-driven inflation shock.
Okay, the risks of over-aggressive tightening from the ECB, what that could mean for the Eurozone economy. Ludovic, staying with us from Allianz, of course, the chief economist there, Ludovic Soubrain. Christine Aquino walking us through some of the key market themes and, of course, the reaction to that commentary we heard from Jay Powell and his remarks on 50 basis points and front-loading. Thank you very much indeed. Coming up, more then on the run-up to France's presidential election, that crucial day on Sunday, what it means for the markets. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
welcome back to the Open this Friday morning. We are 14 minutes into your European trading day. You're seeing losses of 0.8% across the benchmark. Every single sector, bar two, currently in the red. Leading the losses, retail, consumer products and energy. At the top of the list, just by a thin margin, is personal care. That is now the only sector in the green, just up 0.4%. Retail sales in the UK coming in below the forecast, pointing to the squeeze on consumers. And you're seeing that reflected. Sterling dropping today. Currently, sterling down close to 0.7%. So the British pound taking a hit on the back of that news, the conundrum there for the UK economy and the strength of the consumer. Let's check in on some of the individual stocks that are in focus today. The impact, of course, of supply chains, inflation, and Ukraine and Russia continue to be felt across the earnings picture. You had that illustrated from the likes of Renault and AB InBev, but also there's a China factor when it comes to Kering as well and Gucci. Let's start with Renault then. First quarter revenue falling less than expected. So it's a solid number in terms of the first quarter revenue, 9.75 billion euros versus the estimates of 9.3 billion, currently unchanged. The CFO, though, pointing to, quote, severe disruption as a result of Ukraine, the chip crisis and inflation. And, of course, Renault's trying to unwind from their exposure to the Russian markets. AB InBev, they came out with a line. They're taking a $1.1 billion hit on the fact that they're selling down their Russian JV, possibly to a Turkish partner. That stock currently down a little over 2%. And then Kering taking a hit as a result of what's happening with the Gucci brand and the lockdowns in China. That was disappointing, came in terms of Gucci sales below the estimates. Top line revenue climbed about 21%, but it's really Gucci and Citi saying that is a concern for them. They expect maybe a hit to margins going forward, the stock taking a hit of more than 5%, just in the first 13, 40 minutes of this Friday session. Let's get back out to Francine, who is in Paris for us ahead of that crucial presidential election. Francine.
Yeah, Tom, so we know it's the final showdown. Emmanuel Macron and Marine Le Pen face off in Sunday's vote that will decide who will lead Europe's second largest economy for the next 5 years. Now, Macron's lead has been widening leading up to the vote. Markets still evaluating the chances of a Le Pen presidency and what it means for the market. Still with us is Ludovic Subran, Allianz chief economist. Ludovic, first of all, thank you so much for sticking around. But it seems to me that the market is completely ignoring the fact that even if Emmanuel Macron becomes president, it's not by that much. Like, we're talking at 55, 56%. What does it mean for his policies being impacted by some of this nationalist or far-right injections that we're seeing with Marine Le Pen?
I think Marine Le Pen really campaigned on the purchasing power more than on the racism or fascism that he's known for. And so what he already tried to do between the rounds is to reach out to the Mélenchon voters, so the extreme left voters, and to the extreme right by rethinking, for example, the social protection promises he made on the pension reform, also trying to think about complementary health, de-reimbursement and so forth. So I think he heard them. What he can be able to do is indeed linked to what you mentioned earlier, which is the third round with the parliamentary elections. The big risk now is that he has to govern with a minority government.
Would he have to do it with Jean-Luc Mélenchon? I mean, he came third. He's far left, and he wants to become prime minister.
I think Mélenchon, for me, is not necessarily anywhere close to being the prime minister of France.
Kingmaker.
Thanks God. But the problem is more who Macron decides to govern with. Is it more the green? Because he has to put a green touch to his program, to his policies. Is it with the left? Because there is this need for a more redistributive approach to some of the problems, because inequalities have risen a bit in France. That's going to be a bit what comes out of the parliamentary election. So the problem is right now, nobody is really even campaigning on the ground. So we don't see the Macron's members of parliament or the left or the right actually going and campaigning in the territories, in the different constituencies. And so this is for me a bit bizarre, because it's as if we were all on hold on whatever's going to happen in the next couple of days, and we're not really doing what needs to happen, which is happening for the parliamentary elections.
Ludovic, if we wake up on a Monday morning or, of course, late Sunday evening in Paris and decide and find out, in fact, that Marine Le Pen has won the presidency, are the warnings of kind of a Brexit-like effect for France hyperbolic? What are the potential stimulative effects of her tax plans, for example? I'm thinking VAT cuts and cuts to income tax for those under the age of 30.
Well, the first thing, Tom, is you would have to find accommodation for me in your house because I would leave this country. But the second thing is, we're going to have debt to GDP by 2027 at 150%. If Marine Le Pen wins, we have a big attractiveness and reputation negative shock. if Marine Le Pen wins, I think half of France or maybe in some difficult suburbs, people will feel that they have someone that despises them. So the risk of social unrest is super high. And more importantly, when you really look into the details of a program, there is absolutely no consistency. What she wants to do for companies, what she wants to do for purchasing power and for workers. There is a lack of maturity that is obvious. And so that would mean, for me, a lot of uncertainty. And clearly the French bonds, the OAT would react. And more importantly, the private sector investment cycle will be halted.
But this is a wave that, is going through a lot of Europe. I mean, Brexit in the UK and some of the policies put in place, also with tearing up the Northern Ireland Protocol now, rumor that we're hearing about, is something that will change Europe forever. Yeah. So is there a prescription? As an economist, do you assume that actually Europe will go through much tougher times in the next 5-6 years?
I think Europe is at a crossroads in many ways. There are some of the challenges we're faced with, like, COVID was, or like climate changes, or like Russia. This has to be handled at the European level. And clearly, Macron's results, Macron's success is linked to the success of Europe. He's been one of the most pro-European, presidents we've had for the past 20 years, right? So clearly it's true. If Macron wins, there is a second win to Europe. If Le Pen wins, it's not a Frexit. She doesn't campaign on that anymore. But the fragmentation of Europe becomes very likely.
Yeah, it will be quite a fraught relationship.
And already with Macron, the risk of unalignment between the German and the French, the risk of difficulties ahead for the policy normalization is already there.
That could
but
just get worse.
Le Pen,
and it's, of course, an unknown risk. Ludovic, thanks so much. Ludovic Supal there, Allianz chief economist. Now, we'll have plenty more, of course, throughout the day today. And then, watch out, on Sunday, it's our special coverage of the election this Sunday, 7 p.m. London time, 8 p.m. Paris. It's a 2-hour show right when the polls, right when we're allowed to speak about the election, when the polls actually close time.
Yeah, absolutely. Tune in for that. Coming up, driving off with the prize after weeks of speculation. The Tesla boss lines up $46.5 billion in funding. The latest on Elon Musk and his Twitter takeover offer. That is next. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
is Friday. Welcome back to the Open. We are 24 minutes into the European trading day. You're seeing slightly more pronounced losses now across the benchmark, down more than 1%. The standouts in terms of the negativity that we're seeing across these equity markets here in Europe is the CAC 40 and the DAX. The CAC 40 down 1.6%. The DAX over in Germany, of course, down 1.4%. The FTSE MIB in similar territory. The FTSE 100 here in the UK down 0.5%. Retail sales in the UK coming in below the forecast, pointing to the weakness and concerns within the consumer here, the cost of living crisis in focus. It is, of course, still a centrality when it comes to the earnings picture, as well as what we're seeing from the central banks. When it comes to the earnings, of course, we were looking at Twitter and we were looking at Tesla. And after more than 2 weeks of questions over whether or not Elon Musk is truly serious about his Twitter takeover, his bid just got a little bit more real. The Tesla boss has lined up more than $46.5 billion in funding, and he's going to throw in a big chunk of his own cash through equity financing. Bloomberg's Laura Wright has been following the developments and joins us on set now. So how feasible is this lining up of cash that Musk has managed to pull together over the last few weeks?
Well, Musk has put forward an equity commitment of $21 billion. That's much more than the liquid cash he currently has in the bank. So likely he will have to bring in an equity partner. Just over half of the figure you referenced will come from investment banks. Morgan Stanley is set to provide the largest figure. So this equation comes to a higher share price premium than the original unsolicited bid that Musk has put forward to the board. We've yet to hear a response, albeit they are putting forward some defensive measures, and that higher share price would be advantageous for a tender offer, which would require at least 50% of the shareholders to consent. Look, it's been a really tumultuous period since April the 4th, when we learned that Musk had become the social media platform's largest shareholder. Initially, it seemed that Musk and Twitter's CEO, Parag Agrawal, had a bit of a bromance. That passive stake became active and has now turned into a hostile takeover bid.
So, Laura, so that is, I mean, this is definitely, without a question of doubt, the story of the week, if not the year, and Elon Musk really being everywhere. Other tech stories, we've had results from Snap overnight, and then a big blow for CNN+.
Snap, it was all about the user growth. Daily active users up 19% year over year, offsetting the headwinds from TikTok, the platform that the Gen Z kids are using at the moment, and those Apple privacy changes that make it harder for advertisers to acquire user data. Finally, CNN+, another blow to the streaming industry. That platform is going to be canned just a few months after launching the parent company, Warner Bros. Discovery, shutting it down. The cost of content, it's expensive, Francine.
Okay, Bloomberg's Laura Wright. We've got plenty more coming up. Stay with us. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las mediciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Fed Chair Jay Powell hardens his hawkish pivot, signaling 2 or more 50 basis point rate hikes to cool demand. European stocks fall in early trading. The final showdown, Macron and Le Pen face off on Sunday to determine who will helm Europe's second largest economy for the next 5 years. Plus, lining up the money, Elon Musk secures billions from Wall Street in his bid for Twitter and pledges $21 billion of his own wealth. Okay, Francine, you are on the ground for us in Paris, and of course, continuing to read the tea leaves ahead of that important vote on Sunday. I was speaking to some French friends overnight, and they said to me, look, nous détestons Mélenchon, nous détestons Le Pen, but we are really, they said, mise en colère, I think was the word or phrase they used when it comes to Macron. It's the undecideds that could prove pivotal.
Yes. Now, there is one thing in France that actually probably this nation does better than most, which is tactical voting. So I see a lot of chatter, and actually when you speak to a lot of people, also taxis and others, in saying, look, I don't like Macron, but I may just vote for him because he's least bad of two options. Now, what Marine Le Pen has done is she's changed. She has not talked about a Frexit, leaving France out of the EU, but what she has talked about is possible divisive policies, and then, of course, how she funds the deficit. So many questions, but the polls are widening, and it seems that Emmanuel Macron will win this Sunday.
And some have drawn comparisons between Marine Le Pen and her views on Europe and what we saw from Boris Johnson, of course, the cheerleader of Brexit. And the UK Prime Minister is currently doing an international tour. He's in India. He's looking for a trade deal. He's looking also to pressure the Indians on the question of Russia. There was some controversy when he was photographed climbing onto a JCB, given that the front pages of the Indian press have been covered with photos of the demolition of largely Muslim houses on the back of that. So he's faced some controversy there, but we can see that currently the UK Prime Minister is alongside his Indian counterpart, Mr. Modi, of course. They are meeting, again, as the UK looks to shore up its trading relationship with India amid some controversy, again, for Boris Johnson. You can see those live pictures, presumably out of Delhi. Let's check in on the markets then. You're seeing losses across the benchmark, New Delhi, I should say, losses across the benchmark of around 1% across the European space. Again, on the earnings front, let's remind you that the picture looks pretty solid. 80% of the S&P 500 companies that reported have beaten the estimate when it comes to earnings, but really that is being overshadowed by the focus on central banks. Jay Powell putting 50 basis points on the table for May and talking about front-loading, the merits of front-loading those hikes. Nomura even now weighing up the possibility of 75 basis points in June, and certainly the market surprising in May, June, and almost entirely as well, July as well. We continue to watch that picture and the readjustment, the repricing, the run-up in yields that we saw yesterday in the US, and that led to the sell-off in equities. When it comes to your sectors, then every single sector in the red, apart from one, which you can see gaining 0.5%, which is the consumer part of the business. In terms of retail sector, though, that is down 2%, more than 2%. You saw a drop in retail sales out of the UK, the concerns about the health of consumer Technology is also low as well. The run-up in yields pressuring that sector. Energy down at 1.6%. So that is a look 30 minutes into the trading session at the end of the week this Friday. And of course, the importance of the French election and the pricing around French equities, which according to Bloomberg Intelligence are undervalued at this point. You could get a re-rating if Macron proves victorious on Sunday. Francine.
Now, it is the final showdown. Emmanuel Macron and Marine Le Pen face off in Sunday's vote. Tom, it will decide who will lead Europe's second largest economy for the next 5 years. Macron's lead has been widening leading up to the vote. Markets, though, still evaluating the chances of a Le Pen presidency and what that means for the markets. Now, I'm delighted to be joined now by Emmanuel Rivière. He's a pollster at Cantor. We love pollsters, especially when we're still allowed to talk about these polls because they are maybe, thank you so much for joining us.
Thank you for loving pollsters.
I do love pollsters, but especially in France, because they have been a little bit more reliable than certain other parts of the world, i.e. in America. I mean, how confident are you that you trust your polls and that Emmanuel Macron becomes president on Sunday?
Well, if you look at polls and the polls in history, we have never seen such a gap disappearing in such limited time. Having a 10 points gap or more in some polls for Emmanuel Macron, leading the race for the second round, 2 days after the final competition. I think it's never happened that it was finally the opposite occurring. But we must.
What's behind this? Is this because people like Emmanuel Macron, or is this what we call a barrage, that people do not want a nationalist in charge?
Well, actually, we have to remind that Emmanuel Macron is not a strongly rejected leader, and as a president, his popularity, we measure every month in our monthly political barometer the trust in Emmanuel Macron. It's now above 40%, which is quite exceptional at this stage of a mandate for an incumbent president. But of course, there are the one who would have the keys for the second round are the left-wing voters,
right.
And they
the ones
don't
that
like.
Voted, so yeah, it's basically the ones that voted for Jean-Luc Mélenchon. I mean, it's a quite chunky number of voters. Who are they voting for? Because there's a number that actually decide they won't go and vote.
Yeah. Looking at the first round results, yes, for sure, Jean-Luc Mélenchon obtained more than 20% of the votes. But we have to keep in mind that only 1 month earlier, it was about 12-13%, which means that lately voters for Jean-Luc Mélenchon are not aligned with Jean-Luc Mélenchon and La France Insoumise proposition. There are tactical voters who finally choose to go behind the well-placed leftist representative from the left. So those are more likely to vote for Emmanuel Macron and less upset by him as a president. But of course, there are a significant part of Jean-Luc Mélenchon initial voters whose preferred scenario will be to see Marine Le Pen defeated, but without having themselves to put a ballot with the name Macron on Sunday. Therefore, they will pay attention to the polls.
But there are also others, because the link between far right and far left are still quite strong, that will vote for Marine Le Pen, despite Jean-Luc Mélenchon saying do not vote for her.
Yes. In our last poll, if you look at Jean-Luc Mélenchon first round voters, now half of them consider voting for Macron, a quarter consider to abstain,
right,
and a quarter consider to vote for Marine Le Pen. And you're right about the proximity between the opposites, the extreme right and the extreme left, in some domains. For example, the reaction to the management of the pandemic, to the sanitary measure, in particular the vaccination pass, was quite similar. But if you look at the attitude of leftist voters towards migration, towards crime management, and the question of it's totally opposite.
Talk to me a little bit about what we can expect in what we're calling the third round, the parliamentary election. If Emmanuel Macron becomes president, he needs to have the power to change and get things done. Do you have any polls on how that would go and what people vote differently? So vote for a president that's center right, but then go to the far right or far left in June.
Well, We don't have any polls, but there is a reason for that. Sadly, the parliamentary election in France is highly dependent of the presidential election. It's being called now a confirmation vote, and each case previously, it was actually a confirmation of the majority. There are some uncertainties, but in particular regarding the opposition, we have to have in mind that this Sunday vote will decide the majority, and the parliamentary election will probably decide who will lead the opposition, which is not clear, because if you remember last time, 5 years ago, Marine Le Pen was at the second round already, but she only obtained 8 seats in the parliamentary election. But at the time, Les Républicains, the traditional right-wing party, was strong at the first round, and they represented the opposition in Parliament, which is not granted, absolutely not granted.
Which is just very different here. Talk to me finally a little bit about how France has changed. What is extremely surprising when you do not live in France is actually the rise of the far right, and extremism has been steady. What does that mean for what people are feeling? In your polls, is there a policy that would make people feel better? What are they worried about, the French?
Well, I think the first explanation is a very strong disappointment toward politics, toward the way the pays is governed, toward democracy and how it works. We should suppose that regarding the results of the far right, which has gained almost 10 points in 5 years, that there is an hostility toward migrants. But that's something we monitor in a yearly barometer since 30 years. And actually, the proportion of French people who consider that there are too many migrants in France has decreased significantly since the beginning of the century, from 65 to now above 50. 50 is a lot, thinking that there are too many foreigners in France. But it's more a polarization of the right-wing voters than the polarization of the entire country that we are facing.
Thank you so much, Emmanuel Rivière, there, a pollster at Kantar, with some of the numbers that we're really crunching to try and understand what will happen on Sunday. Make sure also you tune into our special coverage of the elections this Sunday. Yes, Bloomberg TV will be live again from 7 p.m. London time, 8 p.m. Paris, as soon as we have those results. Tom.
Okay, Francine, the pictures now that we're getting live from New Delhi. The leader, of course, of India, Prime Minister Modi, alongside the UK Prime Minister Boris Johnson. A couple of lines coming out of this meeting. An important one, of course, an important visit for the UK Prime Minister. You've got, first of all, Modi coming out and saying that India is reiterating its need for an immediate ceasefire in Ukraine. We know there's been concern about the fact that India hasn't spoken out more strongly about the war in Ukraine and its determination to preserve some element of its relationship with Russia. The UK and India also apparently going to strengthen their ties when it comes to energy. The Indians and the Brits deciding to broaden energy partnership. That is from Mr. Modi. Johnson speaking now, the UK Prime Minister, saying that India and the UK have agreed on a new and expanded defence partnership. The geopolitics are fascinating, given that India and China are singing from the same hymn sheet when it comes to their stance on Russia. Okay, we'll keep across that one for you, bring you more lines as they come through. When it comes to Russia, Vladimir Putin claims that Russia has seized Mariupol, but a top Ukrainian official tells us, Bloomberg, Maria Tadeo, that it's too early to tell. More on that story next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
but there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Welcome back to the Open. We are 45 minutes into your European trading day. Losses of 1% across the benchmark. One sector in the green and one sector only, and that's personal care and drugs up 0.2%. Everything else in the red. Most prominently, retail, technology and energy all down between 1.7 and 2%. We continue, of course, to keep an eye on what's happening in France. The CAC 40 currently lower by 1.2%. Let's get back out to Paris, where Francine Lacroix is on the ground. Fran.
Yeah, so Tom, President Vladimir Putin says Russia has seized Mariupol. However, a top Ukrainian official has told Bloomberg and our very own Maria today it's too early for Moscow to say it has taken the key port city.
The Ukrainian armed forces are still in town. Yes, most of them are blocked in these Azov steel plant, and as well as many civilians which are at that same steel plant, mainly their relatives. My president yesterday suggested to have an exchange of those civilians, of those soldiers who are wounded, to the Russian wounded soldiers which are in Ukraine's possession. Unfortunately, we didn't receive no answer.
Well, he was speaking to our very own Maria Tadeo, our Europe correspondent, who joins us now. First of all, Maria, congratulations on some fantastic reporting and interviews on the ground. We've had those conflicting reports. Who controls Mariupol?
Yes, Francine, and at this point it's a very difficult question to answer because there is clearly a battle going on the field, but there is also an information war and to some extent a propaganda war going on here. Yesterday, the Russians said, we control it now. Vladimir Putin was on TV. He said, that steel plant, I'm not interested. We're not going to crawl in it. We're just going to seal it. But the victory is ours. And Ukrainians, well, you heard it right there from Igor Shovko, who's a diplomatic advisor to President Zelensky, say, as long as that plant holds, we consider Mariupol our territory. But Francine, going beyond the technicalities here and the propaganda also that feeds into this, the priority and the key here is, are they going to be able to establish that bridge that Russia has dreamed of for years to connect Donbass, Mariupol, Crimea, and therefore the Russian Federation? I think it really is that point that really matters, whether or not they're able to sustain and operate a bridge. Therefore, the Ukrainians, yesterday they told me our #1 priority is to make sure they're not able to do this. They're not able to get that connection they've wanted now for years, ever since the invasion of Crimea happened in 2014.
And they'll need to win the battle in the Donbass, the east of that country, if that is going to succeed. We know the US is giving another $800 million worth of military aid to Ukraine. What is the latest on that battle?
Yes, and Tom, we see that fight continues, and at this point, and this is terrible, really, for civilians and the people of Ukraine, but neither side has an incentive to go for a ceasefire at this point. You know, there's this understanding that it's gone past a point of no return, but also for both sides, there is this belief that whoever wins the battle for Donbass will have the upper hands in the real peace talks, and the only peace talks that will be material could only happen after the battle for Donbass is settled. And this is why weapons are so important for Ukraine. And yesterday we had the President of the United States, again, another $800 million in heavy weapons to be delivered to Ukraine. But the big question is, will the U.S. suffice, or do they actually need the Europeans? And again, that takes us to Berlin. And it's not clear at this point that Germany is willing to supply the heavy weapons Ukraine says they need in order to win the battle for Donbass.
As we close into 2 months of this conflict, Maria Tadeo on the ground in Brussels for us with the latest on Ukraine. Thank you.
Now, coming up, Kering shares the tumble as lockdowns in China weigh on Gucci sales. So we'll break down all of the luxury reports. We'll possibly talk about M&A as well. That's coming up next. And this is Bloomberg.
Good morning, traders. How are you doing today? As you can see, we have Bitcoin. Sorry, guys. We have short position at 41,417. Right now, I want to place a stop at 41,002. It will give us 1%. In our terms, it will give us £1,000 in profit. Okay, so let's place stop for Bitcoin. It quite moved substantially down at 41,007. Sorry, 002. So please all of you guys who decided and who traded with me, who copied this trade, please do so. Please place your stop and stay with me. We haven't done yet. We didn't finish trade, and hopefully we will move even to better level. Okay, I'll speak to you later, guys, and stay safe.
I'm here at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. That Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed. Welcome back to the Open. Happy Friday. 52 minutes into your European trading day. Losses of about 1% across your benchmark. Let's get the Bloomberg First Word News now with Laura Wright. Laura.
Thanks, Tom. Wall Street banks and some international ones, too, are supporting Elon Musk's run to buy Twitter. In all, $25.5 billion would come in the form of multiple types of debt from a dozen banks across Wall Street and the rest of the world. That's according to a regulatory filing. Morgan Stanley, Musk's advisor, has pledged to provide the biggest chunk, around $5.5 billion. Leaders from Germany, Spain and Portugal have asked French voters not to back far-right leader Marine Le Pen ahead of Sunday's presidential election. In a joint column published Thursday, Olaf Scholz, Pedro Sanchez and Antonio Costa described Le Pen as a candidate who openly sides with those who attack freedom and democracy. They said the outcome would be a choice for all of Europe. Make sure to tune in to our special coverage of the election this Sunday from 7 p.m. London, 8 p.m. Paris. Fed Chair Jay Powell says a hike of 50 basis points is in play at the FOMC's next meeting in May. He also signaled support for more aggressive tightening to curb inflation toward the Fed's 2% target, adding that he sees merit in front-end loading policy moves. Powell spoke at an IMF-hosted panel on Thursday with the Fed about to enter its traditional blackout period before next month's meeting. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom.
Laura, thank you. Kering shares have tumbled around 5% after growth at Gucci, its biggest brand, of course, missed estimates in the first quarter, hindered by lockdowns in China, primarily Shanghai. Gucci sales rose about 13% on a comparable basis. That was way short of the 19% penciled in by analysts. Let's speak to Bloomberg opinion columnist Andrea Felsted, who's been across the luxury story for us. Andrea, talk to us about the China component. I was left scratching my head when investors seemed to reward LVMH and Hermès. They were relaxed about what was happening in China. But for me, having lived in China, seeing the lockdowns in Shanghai, it's remarkable that investors weren't more concerned. You're seeing that play out in Gucci now.
Exactly. I mean, Shanghai is China's main luxury hub. So if there are restrictions, that is going to affect sales. But both Kering and LVMH were saying there's also a little bit of a weight on sentiment, less travelling around, less domestic tourism, which is also going to affect demand.
I thought, Andrea, good morning from Paris, the fashion capital of the world, although I'm probably going to get my Italian passport removed for saying that. Is there revenge spending in luxury? And is it that Gucci are just not getting it right because they've been so bold? I mean, they're also trying to shift strategy. Like, how much of this is lockdowns and how much of it is people getting tired of Gucci?
What is very interesting is when you have this type of environment, it's much harder for those brands that are shifting their emphasis or are trying to turn themselves around. So it's natural that Gucci would be affected by this environment.
Andrew, can they rely on the strength in Europe? We've seen that strength coming through from the European consumers with the luxury and US consumers as well. Is that going to make up for the losses out of China?
Possibly, but there are also some worries over both of those markets. In Europe, you've got whether the war will affect sentiment. In the US, rampant inflation, lack of stimulus. Gucci may also have been affected last year because it has some more accessible price points, and so those marginal customers that perhaps spent their stimulus check on a new handbag won't be doing that this year.
Yeah. Andrea, what's a handbag of the season? What do people want to buy right now? What is the one brand that's killing it?
That's the killer question.
I think it's the staples. It is the Hermès. It is the LVMH. In tougher times, you want something that is more classic. You don't want to risk your money on something that will be in one season and out the next. You want to go for those well-known classic styles, classic shapes that will be an investment piece too.
There you go, Tom, taking notes for maybe an upcoming birthday. Thank you so much, Andrea, as always. Bloomberg opinion columnist Andrea Felsted talking about, of course, all these luxury stocks. Now, that's it for the European Market Open. Surveillance Early Edition is up next. We'll have a full roundup of the markets, Tom, and we'll look at the French elections.
Yep, stay classic. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
We cannot operate at the same pace when it's that kind of inflation that we are dealing with.
We have a accommodative monetary policy supporting our real economy throughout this year.
50 basis points will be on the table for the May meeting.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris. Now, here's what's coming up on today's program. It's on the table. Jay Powell says a half-point rate increase in the next Fed meeting is possible. Lining up the money, Elon Musk secures billions from Wall Street in his bid for Twitter while pledging $21 billion of his own wealth. And stay with Bloomberg Surveillance Early Edition. Yes, this hour we speak to not one, but two representatives for each of the French presidential candidates. We'll be joined by Clément Beaune. He is the French Europe Minister, and Hervé Juvin, an MEP for the National Rally. You can send in your questions on IB plus TV Go. But first, let's check on the markets. So we're lucky because our very own Danny Berger's in London. Danny.
Unfortunately, not in beautiful Paris alongside you, Francine. Look, it is an ugly start to the last day of the week. Euro Stoxx 600 falling more than 1% at one point. It's pared some of those losses, now down just about 0.8%. But really, this is off the back of those concerns in the U.S. about higher rates finally filtering through to the equity market. S&P 500, that fell more than 1.5% yesterday. So today it is flat to slightly lower. Tech basically unchanged as well this morning. Some of the worst of the selling in the bond market has eased, though we're still up by about 5 basis points on your 10-year yield. How soon will we hit 3% with Fed Chair Jay Powell saying that 50 basis points, that's on the table, opening the door to it again. The market thinks it's going to happen 3 times in a row. And sterling, that is getting hammered today, down nearly 1%. Some ugly data in the UK, be it consumer confidence falling to the lowest since 2008, and at the same time, retail sales looking weaker as well. Here's your map. Again, most of these regions are off their lows of the morning. The CAC 40 at one point, that was down more than 1%. It's not just the French elections with the idea you want to take risk off the table heading into the unknown of this weekend, but at the same time, carrying earnings, those really disappointed, so that was a hurt. A little bit better for UK stocks. The DAX, that's also falling more than 1.1%. Again, the more exposed type stocks to to higher interest rates and higher yields. Francine, I also want to bring us some breaking lines on Euro area PMI. They reflect a lot of what we've seen also for some of the regions, that the countries we've seen some. It's a beat when it comes to April services PMI. Those rose 47.7. The forecast has been for 55. However, manufacturing, the beat there isn't as strong. It still is a beat, I should say, 55.3. The forecast had been for 54.9. It's this two-speed Eurozone economic recovery. Manufacturing look a little bit more weak. We're at the same time, some of the end of COVID restrictions helping to unexpectedly pick up some of that momentum when it comes to services data. So certainly a mixed bag, Francine.
Danny, thanks so much. Now, the chorus of hawkish voices continue. We heard from Jay Powell at the IMF blessing a half-point interest rate hike next month and signaling further support to curb inflation.
It is appropriate, in my view, to be moving a little more quickly. And I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does point, that points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting, but I would say that 50 basis points will be on the table for the May meeting.
Well, we're now joined by Ed Shing. He's Chief Investment Officer at BNP Paribas Wealth Management. Ed, thank you so much. So fun to see you actually on a terrace, even if we look at market dislocation because of inflation and much more hawkishness across the world. What does that mean for stocks?
Well, it's not great, is it? Because we're at a point where economic growth is clearly slowing. More markedly in Europe, but even in the US as well, we can see signs of slowing. We can see that Fed regional surveys of activity are pointing to the national PMI going down, which means manufacturing is going to go down, which means economic growth is clearly going to slow, just as the Fed is raising rates.
But so, Ed, are you telling me that, the inflation outlook just got, a lot worse in the last 3 weeks, or is it that suddenly central banks, faced with the decision of either deal with inflation or, take care of growth, have chosen inflation?
They've chosen inflation for the moment. And I think for political reasons, Jerome Powell doesn't really have a lot of choice, because when you have CPI running 8+%, it's like, that's a huge number,
But he's behind the curve.
Oh, absolutely he's behind the curve, which is why it's funny he says 50 basis points is on the table. Of course it's on the table. I mean, it's like 8% inflation. What are you thinking?
Okay, Ed, is it a done deal then? It's not,
yes, I think it's a done deal.
Could we get 75?
Possibly, because I think there is a good argument to say going harder now makes more sense, and maybe easing off later on when growth really slows down, when inflation also, when it's clear that inflation has topped out and is on the way down, maybe then he can pivot a little bit and calm down the rhetoric, but he can't do it now. He's got to go hard.
I love that, Ed. Of course it's on the table. What are the markets pricing in? Are central banks being led too much by the markets?
No, I don't think so. I think quite clearly, if you look at inflation rates, in many ways, the ECB is in an easier place because a lot of the pressure in Europe is coming from, of course, what happens in Ukraine.
Yeah.
Right? And we're very close to it.
Yeah.
Energy prices, in particular natural gas prices, are a huge problem in Europe. They're hurting growth, they're hurting the consumer, and there's nothing the ECB can do. In the US, it's a difficult question because wage growth is an issue. And the Fed can do something about that.
But what I don't understand is inflation being, repriced because then we think the war's going on a long time. Like, for me, nothing that much has changed since the start of the war, but there was a belief in central banks that this was a supply shock for Europe that would end.
I don't think it's just about the war. I think the supply shock also is about what is happening in China.
Yes.
The COVID lockdowns, again, particularly Shanghai. You have 38 million people locked down. That is spreading across across eastern China at the moment. And we know there are huge numbers of ships waiting to dock in Shanghai that cannot dock at the moment because of COVID. Right. So that's going to take some time to unwind. That's something the central banks had not anticipated, and that risks inflation staying high for longer.
In this kind of environment, what do you buy? So what equities? Is it, the expensive stocks that you get rid of and try and find value elsewhere?
Yes, I think commodity producers. It's obvious. I mean, people say commodity prices are already very, very high. Yes, but the commodity producers will continue to benefit from that.
But which ones? The ones that then are used in the transition? So the lithium producers or the dirty stuff?
Lithium's a difficult one. I think yes, but I would say more broadly, the industrial metals and the battery metals, whether it be nickel, copper, aluminium, tin, as well as lithium and cobalt, the whole gamut, I think.
Okay, Ed, he's just getting fired up. And then we need to talk about the French election a little bit later. Ed Shing, their Chief Investment Officer at BNP Paribas Wealth Management, he stays with us, and we'll talk a lot more about France. When you look at France, when you look at the polls, of course, the market pretty cool about what will happen ahead of that second round on Sunday. The polls have also been widening, which means that when you look at what Emmanuel Macron could do, about 56% if you look at an average of the polls. Now let's get straight to the Bloomberg. First word news, here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. President Vladimir Putin says Russian forces have seized Mariupol, even as his defense minister said more than 2,000 Ukrainian fighters remain holed up in the city. Ukrainian President Volodymyr Zelensky's deputy chief of staff told Bloomberg the declaration is indeed premature.
The Ukrainian armed forces are still in town. Yes, most of them are blocked in these Azov steel plant, and as well as many civilians which are at that same steel plant, mainly their relatives. My president yesterday suggested to have an exchange of those civilians, of those soldiers who are wounded, to the Russian wounded soldiers which are in Ukraine's possession. Unfortunately, we didn't receive no answer.
Now, Wall Street banks and some international ones too are supporting Elon Musk's run to buy Twitter. In all, $25.5 billion would come in the form of multiple types of debt from a dozen banks across Wall Street and the rest of the world. Now, that's according to a regulatory filing. Morgan Stanley, Musk's advisor, has pledged to provide the biggest chunk of about $5.5 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. This hour we speak to two representatives for each of the French presidential candidates. We're joined by Clément Beaune, he's a French Europe minister, and Hervé Juvin, an MEP for the National Rally. Send in your questions on IB Plus TV Go. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why did you do it?
And I say this with great gravity tonight, because for our country, this is bad news. Because you depend on the Russian power and you depend on Mr. Putin.
I truly want to make purchasing power the priority of my next 5-year term if the French have confidence in me.
Lines there from Wednesday's televised debate ahead of Sunday's election runoff, where French President Emmanuel Macron has attacked his nationalist election challenger Marine Le Pen for her links to Russia. Now, Germany's Chancellor and Spain and Portugal's Prime Minister have all criticized Marine Le Pen in a joint op-ed, asking voters not to back the far-right leader when they go to the polls, but stop short of explicitly endorsing Emmanuel Macron. Now, the gap between the candidates has widened, with Macron on a pace to beat Le Pen. Now, we're joined by Hervé Juvin. He's member of European Parliament from the right-wing political group Identity and Democracy. Hervé is aligned with Marine Le Pen's National Rally Party. So thank you so much, Mr. Juvin, for joining us. I have a million questions to ask you in terms of exactly, first of all, Europe. If we start with Europe, and you're considered one of the intellectuals, of course, advising also Marine Le Pen on a number of issues. So she wants to stay in Europe, but she wants to reform it. Yep. There are talks about border controls, being this. Like, what's your vision of Europe if she becomes president?
My vision is back to the basics. European Union is nothing without the nations. And we have to rebuild a new Europe on the freedom of nations, the sovereignty of nations, and the ability of nations to control their borders. We are at the heart of the European Union, at the birth of the European Union. That's free nations, and we have to come back, because at the moment there is a loss of sovereignty for nations, and they are very uncomfortable with that.
But, Mr. Juvin, I mean, if you don't have the free passage of goods, then this is not the Eurozone that we know. So this would change, right? The Schengen Agreement and everything else. It would be a very different...
We don't want to break up with Schengen Agreement. We want the European Union to be in full control of its external borders. It's not the case at the moment. So we have to reform Frontex, the European agency in charge of controlling the border. Frontex is now a travel agency for migrants. We have to put an end to that.
But so if you're an Italian going to France, you could be checked. This is what you're proposing, because this is something that the markets haven't really, don't know what to make of it. It's kind of, you want to control the borders, but you don't want to touch Europe per se.
We want Europe not only as a free market, but also as a political entity. So we have to build on the identities of nations, and we have to build on the freedom of nations.
Do you think France needs to be closer to Russia? I know you've called President Zelensky the puppet of the Americans. What does that mean?
That's quite funny, because at the moment, of course, Mr. Macron attacked hardly Marine Le Pen against her supposed relationship with Russia. But at the end of the day, Mr. Macron met Mr. Putin 5 or 6 times. Marine Le Pen met him only 1 time. At the same moment, Mr. Macron told about brain-dead NATO. Mr. Macron spoke with Mr. Stoltenberg to ally with Russia and China.
But I want to ask you, what would your relationship, if Marine Le Pen is in charge, what would that relationship look like with Russia? If you think the president of Ukraine is an American puppet, what does that mean for support to Ukraine?
First time, Russia has to pay for the invasion of Ukraine. So at the moment, it's not time to speak about a new alliance with Russia. And secondly, Russia is here to stay. We have Russia only 2,000 kilometers from France. So obviously we have to speak with other Eurasian powers like China, like India, and of course like Russia.
Would France under Marine Le Pen give as much support to Ukraine as it is getting now?
We have to support Ukraine because Ukraine is a sovereign country, and we have a deep feeling, and very hopefully with the birth of a national feeling in Ukraine against Russia. And we welcome this national feeling in Ukraine. But at the same time and at the moment, we are very concerned about disunity in European Union and maybe the end of European Union as we know it. As you know perfectly well, there is a great divide at the moment.
On oil embargo.
On oil embargo, on financial embargoes, on so many things. There is a great divide inside European Union nations, and it's so dangerous.
But what is your position on the oil embargo? Would you go ahead with an oil embargo, given the way things are now?
I'm very lucky because I am a French citizen, and I don't need Russian oil or Russian gas. But I'm not in the same position as Germany, as you know perfectly well. Germany is totally dependent on Russian gas for its industry.
So you think Marine Le Pen, again, as president, would be for an oil embargo?
We have voted for the sanctions in the European Parliament. So I'm very comfortable with that. We are for the sanctions against Russia, and we are to put an end to this invasion before we come to World War III.
Okay, talk to me a little bit about how you fund some of the programs that Marine Le Pen has talked about. So first of all, what does it mean for the deficit? How do you fund some of the tax proposals?
We have a very well-financed program and a very strong public finance trajectory. What is amazing for me is Mr. Macron was talking a lot about entrepreneurship, about innovation, and so on and so on. But who vote actually for Mr. Macron? He scored very well in the 50, 60, 70 years old.
Sir, how do you found your proposals? We're going to talk to the Macron team as well. I want to know your policies. Like, how do you fund some of the proposals that you've put in place?
We want to rebuild strong policies of public finance because it's unbearable at the moment. We want to reduce the deficit, but we want to double the potential growth of France by a sovereign fund. Nowadays, the France Avenir Fund is 30 billion euros. We want to build in the 5 years of the presidency of Marine Le Pen a very strong fonds souverain français of more than 500 billions, because that helps us to go far away 2.5% of growth annually.
Hervé Juvin, thank you so much for joining us. He's a member of the European Parliament, and he's from the political group Identity and Democracy. Now, we'll have plenty more, of course, from the French elections. Beautiful day in Paris with the Eiffel Tower in the background. Coming up, Vladimir Putin claims that Russia has seized Mariupol, but a top Ukrainian official tells us that's premature. More on that story next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance, early edition of Francine Lacqua here in Paris. Now let's get straight to the war in Ukraine. And President Vladimir Putin says Russia has seized Mariupol. However, a top Ukrainian official has told Bloomberg it's too early for Moscow to say it has taken the key port city. Joining us now is Bloomberg's Europe correspondent Maria Tadeu, who also did that important interview. So Maria, conflicting reports, who actually controls Mariupol?
Yes, and Francine, if you ask the Russians, will tell you they control Mariupol now, that this is a victory for the Russian Federation. Vladimir Putin was on TV yesterday saying there is no need to go into the steel plant. That is where 2,000 Ukrainian soldiers are stationed. We're not going to crawl into that. We're just going to seal it. That is the spin that the Russians are putting forward. When it comes to the Ukrainians, they say for as long as that plant holds, that is a Ukrainian city. So you can see, Francine, this is a battle on the ground, but it's also a battle and a war information in many ways. But what really matters, and this will really determine who has control of Mariupol, is whether or not the Russians are able to establish a working bridge that connects the east and the south of the country, effectively running through Crimea into the Russian Federation. Like you know, Francine, they've been aiming for this since the annexation in 2014. Whether or not they're able to get it and get it up and running, that will determine really who controls the area.
Maria, very quickly, can Ukraine keep up the fight?
Well, they say they can if they get the weapons. This is why that announcement yesterday by President Biden of another $800 billion into weapons for Ukraine is something that they welcome. But the destruction and the damage already done to this country, Francine, is huge. The IMF now says a 35% GDP construction. So this is, of course, becoming very difficult for the Ukrainian government to handle the situation on the economic front. A lot of damage already done.
Thank you so much, our Bloomberg Europe correspondent Maria Tadeu there in Brussels. Now, coming up, we'll have plenty more from the French elections. The French Europe Minister, Clément Beaune, on Sunday's presidential election. That interview is up next. We'll talk about Europe. We'll talk about Ukraine. We'll also talk about some of the funding for some of the proposals. This is Bloomberg.
soaring energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It's on the table. Jay Powell says a half-point rate increase in the next Fed meeting is possible. Lining up the money, Elon Musk secures billions from Wall Street in his bid for Twitter while pledging $21 billion of his own wealth. And stay with Bloomberg Surveillance Early Edition ahead of the final round of the French presidential election. Not only are we live in Paris, the most beautiful background, but we also speak to France's Europe Minister. He's Clément Beaune, and you can send in your questions on IB Plus TV Go. So good morning, everyone, and welcome from sunny Paris to Bloomberg Surveillance Early Edition. We're looking at, of course, the French election special coverage, and I am Francine Lacroix, indeed close to the Eiffel Tower. Now, first, though, let's check in on the markets. Danny Berger has all of the action in London, and Dan, it's all about the Fed and, of course, the hawkishness that we're seeing from several central banks.
Yeah, the Fed, the ECB, there's a little bit of hawkishness coming from the BOE even. Now markets have priced in 3 consecutive basis points worth of hikes for the U.S. over the next 3 meetings. That means it's all about rates this morning. You are seeing your 10-year yields pick up just about 3 basis points. It had been wobbling before, but that's coming back into the market. Not enough to totally throw off U.S. equity futures this morning. They're basically flat, but it was enough to crater markets yesterday. Stock markets finally waking up to the reality of higher yields. In Europe, playing some catch up with that. Europe also off the lows of the morning, down 0.7%. A lot of earnings mixed into that as well. Some concerns around Kering, Gucci, sales weren't as strong, French election and all of that. Francine, I'm sure you're well aware of how much risk do you really want to own going into the weekend. And sterling getting hammered this morning, down nearly 8%. We had really bad data out this morning on the consumer as well as retail sales. And Francine, just getting some breaking lines crossing on PMIs. And it is a miss for services PMIs coming in at 58.3. The forecast had been for 60. April manufacturing PMI coming from the UK, that's a little bit stronger, 55.3. The forecast had been for 54. Not moving too much when it comes to the pace and direction of cable. That was already down, still down around 1%, as you can see there, Francine.
Yeah, it's amazing, actually. The cost of living already taking a bite, certainly for the UK economy. That's going to complicate things a lot more for the Bank of England. Danny, thanks so much. Now, on the last working day before France's vote, France votes on Sunday, some polls have shown that Emmanuel Macron is on pace to beat Marine Le Pen, while domestic French and European leaders rally around the incumbent president. Now, in a televised debate ahead of Sunday's election runoff, he claimed that by taking out a loan from a Russian bank, Marine Le Pen had made herself dependent on Russian power.
Why did you do it? And I say this with great gravity tonight, because for our country, this is bad news. Because you depend on the Russian power and you depend on Mr. Putin.
I truly want to make purchasing power the priority of my next 5-year term if the French have confidence in me.
Okay, those were the two candidates, of course, in the debate, the only debate, and that was on Wednesday. Now, we're joined by the French Europe Minister, Clément Beaune. Minister, thank you so much for joining us. I have a million questions on spending, on taxes, and things like that. But first of all, is there a danger of complacency? We're 2 days away from the election. Polls basically almost say it's a given, by 10 percentage points that Emmanuel Macron becomes president. What's the danger?
It's not a given, so the danger in every election is to think that the vote has taken place before the vote. We will see how it goes on Sunday. Of course, we are trying to fight until the last hour. As you said, it's the last working day and the last campaigning day. So I will be, like a lot of colleagues and supporters of Emmanuel Macron, fighting and trying to convince until late tonight. But we should say that we need high turnouts and we need people to vote for Emmanuel Macron, not only to say they don't want Marine Le Pen, but to vote in a positive manner for Emmanuel Macron.
So who are you trying to reach? Is it the undecided voters? Is it the Jean-Luc Mélenchon voters? Have you identified a type of voter that needs to come on your side to make sure you win on Sunday?
We don't want to kind of divide a society in a political market with shares that you had to convince, but of course it's important for people who would be tempted not to vote because they didn't vote in the first round, for instance, 25% of the voters around this. And also some people who are, we can hear this in the debate, tempted to say Le Pen or Macron, neither the one, neither the other. We don't want this because it's a huge choice to make between, I think, a positive project for economic reforms, for Europe, for public services and so on, and Marine Le Pen on the other side, who has presented herself in a kind of softer manner in a way, but she remains a far-right candidate that we have to identify and to sometimes debunk the myth of a soft version of Le Pen.
But, Minister, what's surprising as an outsider, and I know that the polls have widened, and I know that the markets think that Emmanuel Macron will be president on Sunday, is still over the last 6, 7, 8 years a swing of France to the extreme and to the more nationalistic candidates. How can you explain that?
To be frank, I think it's a bit more complex than this, because we saw in the first round also that on the left, with Jean-Luc Mélenchon getting 22% of the votes, very close to Marine Le Pen, actually.
An angry vote, maybe?
Yes, it's an angry vote for both, probably, with different reasons, basically, behind this. For Jean-Luc Mélenchon, probably there were a lot of voters who say the traditional left-wing party, the Socialist Party, is not strong enough, is actually kind of disappearing. So we want to vote for a more radical left-wing guy, but to say in a way we are proud to be left-wingers and we want more social elements in the platform and so on. But there is this element of being radical in our democracies. We can see that, unfortunately, not only in France. We could see that through the Trump vote, the Brexit vote, through the AfD in Germany, in Italy and so on. I think, to be frank, it's a long-term trend in our democracies. I must also say, on a more positive note, that when you look at Le Pen's platform, I think it's basically the same as it was 5 years ago, especially in Europe. She said more clearly 5 years ago.
She says no Frexit, no leaving the EU.
I mean, a signal. She says no Frexit because she knows that Frexit is not popular with French voters and that leaving the Eurozone is not popular with French voters. But at the same time, that's what I try to say to French voters every day, every hour. In practice, she wants to do the same because she wants to leave the energy market. She wants to reduce unilaterally our budget contribution and so on. So de facto, it's the same risk. But the only reason why she does not present Frexit as such is because this element of radicality is not in the French vote anymore.
But I want to focus on your policies because, so let's say that you win on Sunday, Emmanuel Macron gets a second presidency. What happens in the third round, as we call it, which is June? How do you make sure that you have enough control so that actually you can get the job done? What happens if you have a cohabitation? Is there a chance that someone like Jean-Luc Mélenchon would even have the power to become prime minister?
Again, nothing is a given, not even the victory in the, what you call, third round, the parliamentary elections, which will take place mid-June. I'm confident in the case of a re-election of Emmanuel Macron that we are able to get this majority to get the job done, to get the reforms done. It was, I recall this, always the case in previous presidential elections, that after that you get a majority in parliament. But we will have to fight for this too, because it's the third time in 20 years that you have the far right in the second round, so it's a reality. A lot of voters vote for the other candidates because they just want to avoid having the far right in office at the Elysee. But Jean-Luc Mélenchon is betting on this. Some voters, we have a strategy to say, okay, I voted for Macron, I didn't want Le Pen, but now I will change the situation for parliamentary elections. But I think it will be very important, but this is the next step, to say we need a majority to get the platform implemented and to get the job done.
What happens if you can't? So what happens to this country?
We'll manage, I think, but first we have to win the presidential election, which is my main concern today.
Yeah, which is 2 days from now. Talk to me a little bit about how you're seeing Europe at the moment. So because of the Ukraine war and the invasion of Russia, do you feel like countries have come together a little bit more, or actually behind the surface, are they really splintering, for example, on the oil embargo question? It's
always difficult to get unanimity, to get consensus in Europe or in a club like NATO and with allies across the Atlantic Ocean, but we managed so far, and I think it's already a very strong signal of unity, of firmness towards Russia. To be frank, I think Vladimir Putin was betting on this lack of unity and this lack of firmness. We have at the EU level already 5 waves and packages of sanctions, very strong. We are discussing now an increase in the sanctions. Of course, it's related to the energy sanctions that we could take. It's more difficult because the pain we will get for that is higher too, and we will have to protect our consumers, our citizens against the backlash effects in a way on oil prices, for instance, but we will have to do it. I mean, do you think we have been very clear in the presidential debate as well. We will have to take strong decisions on increased sanctions in the weeks to come.
Minister, do you think the cost of living and the high inflation will dominate everything in the next 5 years?
I don't know, to be frank, about the next 5 years. I think it's in all democracies a concern by people who are always checking and asking, sometimes, especially in France, public authorities to act to protect purchasing power. It's clearly a concern that will be very high in the next months. We have to be clear, at least until the end of the year, because even before the war, there were tensions on the energy markets. We could see energy prices rising, and the war, I hope, will be as short as possible, but the effects of the war will last at least a few months. So we have to be very transparent towards our citizens. I've been during the campaign. The prices will go up in a lot of sectors again during the summer and probably a bit later.
Minister, thanks so much for joining us this morning on Bloomberg TV. That was the French Europe Minister. He is Clément Beaune, of course, joining us to talk about that campaign, but beyond, also to talk about inflation, Ukraine, and Europe. Now, make sure you tune into our special coverage of the election this Sunday. We'll be live on a Sunday. It's very unusual for Bloomberg, from 7 p.m. London time. That's 8 p.m. Paris time. This is to really see what those election results. That's as soon as we can talk about the exit polls. So don't miss it. We'll look at full market reaction also across the board this Sunday, and this is a Bloomberg.
biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
I would say that 50 basis points will be on the table for the May meeting. The big issue that we're very focused on is inflation and getting inflation back down to our 2% goal.
Our inflation is fueled by a supply shock, which calls for a particular type of response, which brings together fiscal policies and monetary policy. It is supply-driven, number one, and it needs to be addressed in a sequential, flexible, gradual way.
It's too hot. You know, it's unsustainably hot, but notwithstanding it, it's a very, very good labor market for workers.
So that was a stellar panel, actually, over there at the IMF. We're just also getting some breaking news out of Christine Lagarde, president of the ECB. We were just hearing there telling ECB policymakers to hold back criticism. Now, this is according to Reuters. We did hear in the past many other presidents of central banks saying that they don't like leaks. They certainly don't like criticism because that's then interpreted that the markets, and it can also be market moving. We also had that breaking news a couple of minutes ago. China said to face its biggest oil demand shock since early 2000s. That could lead to a dislocation again in some of the other commodity markets. We're back with Ed Ching, Chief Investment Officer at BNP Paribas Wealth Management. So this is something, actually, China is said to face the biggest oil demand shock since the early 2020s. So in the last 2 years, which is a good headline, but not market moving or certainly not earth shattering. Ed, save me. When it comes to I mean, if you look at China and this headline coming out, you know, China said to face the biggest oil demand shock since 2020. I mean, sure, we knew that, right? It's kind of like...
It's not the issue. It's not the issue. Look,
what is the issue? It's lockdowns.
Yeah, the issue is lockdowns, and the issue is the property market. The biggest issue is actually the property market because they still haven't dealt with that, the Evergrande and the fallout from Evergrande, in a controlled fashion, in a comprehensive fashion. You know, they should be creating a bad bank to hold property bad debts, putting that aside and allowing banks to get on with the activity of lending, and they're not doing it at the moment.
So we're so distracted by inflation. We're so distracted, you know, by some of the atrocities that are happening, or of course in Ukraine by, you know, this election. Are we underestimating that the biggest risk to the world economy is China right now, and also slowdown in growth?
Yeah, because the problem is you have the US already slowing down. You have Europe slowing down. What's the third engine? It's China. You know, if we have all three engines slowing down at the same time, it's not good news, is it? So that's the problem. And I think we focus so much on the first two engines, we've forgotten about that third engine.
But could it lead to a worldwide recession? Like, what are we looking at? What's worst case scenario here?
Yes, a worldwide recession is clearly the worst case scenario, particularly if Fed monetary policy gets tightened too far and provokes a recession in the US. Because already, you know, if there's a recession in the US, that is one of the biggest export markets in the world for China. That makes life difficult for China. Europe's the second export market. It's already slowing down. So how do we escape if the Fed goes too far?
Right. Is there a risk that the Fed goes too far? And actually, what does it mean for French stocks that are already, I mean, they're ignoring this election, right? For the moment, there's a bit of a discount, but I don't know whether that's because of ECB
There's a tiny bit of volatility. Yeah, but, you know, it's not a big deal because ultimately, you know, if you look at the opinion polls, President Macron has a 10 to 13 point lead across the opinion polls at the moment. The TV debate changed nothing. So the markets are not really pricing in heavy volatility.
If Macron becomes president again on Sunday, do we see a bit of a lift in the euro-dollar? Does it change anything for spending?
Not really.
Because Give me something, Ed. What will it change?
No, the biggest driver will be monetary policy on both sides of the Atlantic. Yeah. I mean, I find it very difficult to understand why the ECB has a negative deposit rate today. It still has a negative. We have negative interest rates in Europe still today. Why?
Why? I mean,
I don't know why.
Did you see that headline?
Yes.
Christine Lagarde asks for no criticism.
Yeah, I get it, because I think what she's trying to do is quell a little bit of dissent within the ECB governing council. Because there are some people obviously pushing to go faster, and she's saying, well, you know, we've got to take a moderate stance. We don't need to follow the Fed. We don't have the same issues. And it's true. They don't have the same issues as the Fed in terms of wage growth. That's for sure. However, a negative deposit rate. What's going on? We can go to zero. It will be zero impact on growth. Zero. So why not do it?
But it helps the banks.
But it would help the banks. Exactly. So why not just go ahead and do at least that?
Okay, Ed, thank you so much. Ed Ching, their Chief Investment Officer at BNP Paribas Wealth Management. Now, we'll have plenty more, of course, from Paris throughout the day. We'll be back here on Sunday and Monday. But now, let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. CNN's new paid streaming service, CNN Plus, is shutting down just a few weeks after it launched. The abrupt end comes at the hands of a new corporate leadership team, and despite a major investment by the network with big-name anchor recruits and costs into the tens of millions of dollars, the collapse is a potential warning sign for media companies joining the increasingly crowded streaming space. Now, Gucci sales growth missed estimates in the first quarter as lockdown in China weighed on the performance of the biggest Kering brand. Sales at Gucci, which generated over half of Kering's revenue for the period, rose about 13%. Analysts had predicted a gain of almost 19%. The figures follow strong results from LVMH and Hermes last week. And Disney is set to lose perks as Florida's Republican-controlled legislature cleared a measure to strip the theme park's special tax status. This is escalating a feud between Governor Ron DeSantis and the entertainment giant over the criticism of the state's so-called Don't Say Gay law. The move raises questions about who will be on the hook for paying back about $1 billion in municipal bonds. The White House says DeSantis should not have taken action against Disney. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, driving off with the prize after weeks of speculation, the Tesla boss lines up $46.5 billion in funding, the latest on Elon Musk and his Twitter takeover offer. That's next. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
So after more than 2 weeks of questions over whether Elon Musk is truly serious about his Twitter takeover, his bid just got a lot more real. The Tesla boss has lined up more than $46.5 billion in funding, and he's going to throw in a big chunk of his own cash also through equity financing. Well, Bloomberg's Laura Wright has been following the developments. Laura, you and I obsessed about this story. So how feasible is Musk's latest offer?
Well, $21 billion equity commitment from Elon Musk. That's far more liquid cash than he has in the bank at the moment, Francine. So he's likely to have to bring in an equity partner. Debt financing will be provided by investment banks such as Morgan Stanley. They will provide the largest chunk, and Barclays. Now, if Elon is to go ahead with a tender offer, in addition to that original unsolicited bid for the board, it will need to be at a premium in order to persuade at least 50% of shareholders. It's been a tumultuous period already. Initially, it seemed as though there was a bromance between Elon Musk and Twitter's CEO Parag Agrawal. That passive stake became active. It's now turned into a hostile takeover attempt, Francine, but we'll see. It's all to play for.
Yeah, it's just such a good story, Laura. Thanks so much, Laura Wright. So we're back with Ed Ching. Ed, I feel like it's a love story between Wall Street right now and Elon Musk because they're looking to fund Twitter. Like, what happens with Twitter? Does it go to the valuation, or is this just a vanity project?
I think it's a tough question because the thing is, Francine, the bid isn't actually that generous. So he's been very smart about this. And it's true that I find Twitter an amazing platform. And, of course, he is a master user of Twitter. He knows best of all the value in Twitter. I mean, the amount of free advertising Tesla has got via Elon Musk's Twitter account, it's just incredible. So he understands that is worth a lot more than it is today.
Is this a vanity project? You know, another billionaire looking at something that he wants to buy because it's a jewel in the crown? Or does this make financial sense?
I think this does make financial sense. I think he's absolutely right. There is a lot of lower-hanging fruit, and I do think the Twitter management has underutilized, underexploited the very valuable real estate they have on their hands. And I think absolutely, if he doesn't take it private, someone else will, at perhaps a higher valuation. And this may be a good way to flush that out.
Yeah, I mean, a lot of people are excited about the fact that he wants to get rid of the bots that are on Twitter. Talk to me a little bit about it. What do you do with tech valuation in general? So Netflix got slammed. I mean, wow, that was ugly.
Well, you cannot afford to disappoint on earnings. And that's the bottom line. And Netflix disappointed not only on earnings, but even worse, on subscriber growth. And this has been a worry of Wall Street for a while, and it just became very, very real. And we've realized that yet another lockdown winner is becoming a post-lockdown loser, like Zoom.
Right. But this is also because you have inflation up, and if I need to cut down, then I cut my Netflix account instead of not buying toothpaste.
And the competition, I mean, you've got Amazon, you've got Disney, you've got HBO Plus, you've got a lot.
Bloomberg.
You've got Bloomberg, exactly. You've got a plethora of alternatives, which perhaps you didn't have a few years ago.
There you go. You can watch Bloomberg Surveillance Early Edition instead of Bridgerton. This is what Ed Ching recommends. Thank you so much, as always, Ed, Chief Investment Officer at BNP Paribas Wealth Management. We'll have plenty more, of course, throughout the day right here in Paris. Up next, though, Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kay Lines in New York. Our Tom McKenzie is in London. We'll talk about markets. We'll talk also about the Paris elections and Twitter. This is Bloomberg.
know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold meaning that a third dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
High prices, high inflation, they're disruptive. Like, they make life challenging.
The Fed has actually, put us in a pretty difficult position.
In the near term, the Fed is going to do what they can to get their credibility back.
I would say that 50 basis points will be on the table for the May meeting.
This is Bloomberg Surveillance, early edition, with Anna Edwards, Matt Miller, and Kayleigh Lines.
It is 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong on this Friday, April the 22nd. Our top stories today. It's Fed Chair Jerome Powell's most aggressive approach to inflation yet. He's looking at 2 or more half percentage point rate hikes. In France, Emmanuel Macron is closer to winning another term as president. Nationalist leader Marine Le Pen is running out of time to narrow the gap between them before the runoff election on Sunday. And Elon Musk's attempt to buy Twitter has gotten a lot more real. The world's richest person has lined up more than $25 billion in debt financing and is pledging $21 billion of his own money. Welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie, stepping in for Anna Edwards in London with Matt Miller and Kayleigh Lines in New York. What a day, Kayleigh.
What a day indeed. Happy Friday to you, Tom. It's been a long week again. Now, it definitely was a painful end to the week for most parts of Asia. You had the MSCI Asia Pacific Index as a whole falling to its lowest level in more than a month, with Japan and Hong Kong creating a drag. One bucker of that trend, though, was actually Chinese equities. The CSI 300 rose about 0.4%. You have authorities within China encouraging funds to come in and buy equities, try to stop the bleeding to an extent in the Chinese equity market. That working at least for today. Speaking of things that have been bleeding, that would be really the global bond market. The selling pressure has been intense all across the world, and that is true too in Australia as the market bets on more aggressive policy from central banks, including the RBA. As a result, you saw that 2-year yield in Australia moving up 13 basis points. A lot of movement at the short end. 238 is where we sit at the moment. That is the highest going back to December of 2014. And of course, while a lot of central banks are getting more hawkish, the BOJ certainly is not. They are sticking with easier policy. That has kept the Japanese yen around a 2-decade low against the U.S. dollar. We're still trading right around that 128 level, Matt.
All right, well, U.S. Treasuries can't keep up with the Aussie 2-year level, but we are at the highest since December of 2018. on the 10-year yield. 294.72. You can see the yield rise here as investors let go of that debt. S&P futures coming down as Jerome Powell hardens his hawkish position, and as we hear from banks like Nomura, who are forecasting a 50 basis point hike followed by 275 basis point hikes. It seems like everybody on the street's trying to one-up each other. NYMEX crude down 2% right now, but that's not helping the market. 101.75. Maybe it'll give us a little bit of a lift later or reduce the losses that we see at the open. And Bitcoin not moving much and still hovering around that 40,000 level that it's fallen to this week, 40,389. Tom, what do you see going on in Europe?
Yeah, Matt, some divergence in the European markets. The FTSE 100 is lower by about 0.6% here in the UK, digesting some retail sales data. That weighed on sterling, just pointing to the squeeze on the consumer here, the cost of living crisis, something I know that you're reflecting on stateside as well. We're, of course, looking at what's happening in France with the elections. That final vote on Sunday, the CAC 40 is lower by a little over 1%. We continue to watch that, with Bloomberg Intelligence suggesting you could see a re-rating of French equities to the upside if Macron proves victorious come Sunday evening European time. Across the benchmark then, losses of 1%. Of course, so still adjusting to the earnings picture, yes, but it seems the focus, as you've been discussing, more squarely now on what's happening with the central banks and those hawkish comments, not just from the Fed and Jay Powell, but also ECB officials as well this week. The CAC 40 currently down 1.4%. Again, we continue to watch that. Arguably undervalued versus the rest of the European space. Some of that risk around Marine Le Pen is priced in. We'll see if there's a re-rating, again, depending on how those results pan out. Euro-dollar 107. Pressure on the single currency, down 0.3%, largely as a result of dollar strength. And when it comes to the yield space here, the 2-year German up by 6 basis points in terms of the yields, again factoring in the more hawkish Jay Powell, but also that sentiment from the ECB as well, arguably playing catch-up, of course, from Madame Lagarde. Let's switch on and see how things are playing out when it comes to all things Russia. We continue, of course, to watch the events and that battle in the Donbass region. We had Olaf Scholz of Germany, the Chancellor, speaking to Spiegel, saying that, look, even if we cut off gas from Russia into the German market, that's not necessarily going to end the war. So again, seeming to push back on additional sanctions when it comes to energy, well, certainly gas. You're seeing losses of 0.5% across the Russian benchmark. A bit of strength there, though, for the ruble, up 3%. And in terms of the bonds, of course, we continue to watch whether or not they will slip in to default on some measures. That is already starting to happen at the sovereign level. That is the run of play across the Russian markets. Matt, Kaylee?
All right, Tom, well, let's talk about what else is going to be ahead on this Friday. It is Earth Day, of course. Nearly every industry and many nonprofit organizations are spending the week and month promoting climate change. We'll also get U.S. PMI data at 9:45 a.m. New York time today, and we will have an interview with U.S. Treasury Secretary Janet Yellen coming up at 11:45 a.m. New York time. Really looking forward to that one, Matt.
And we have, tonight is the Fish Show at Madison Square Garden. It's the New Year's Eve show, rescheduled. I'm very much looking forward to that, but also focused on the Fed. Jerome Powell is helping to harden the Fed's hawkish pivot. He spoke at an IMF panel yesterday.
There's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So I would say that 50 basis points will be on the table for the May meeting.
All right, so Jerome Powell says 50 basis points is on the table for May. That is Nomura's call, but now they're changing it. They expect 75 basis point hikes in both the June and July meetings after a 50 basis point hike in May. Bloomberg's Kriti Gupta is joining us now with more. So Nomura really going for it. The market pricing not quite there yet, though.
Not quite there yet, but not far off either, which is really interesting because the 75 basis point is something that we've heard from James Bullard a lot, right? That it's on the table, but it's not necessarily something that he's making his base case. What he is making his base case is 50 basis points in May, and that's really where you're seeing the market as well. The market now pricing in about 52 basis points for the May meeting coming up on May 4th, but also the June meeting and even the July meeting. So it really tells you here that the hawkish kind of move that you're seeing in the markets could eventually accelerate to 75 basis points. Let me give you the possibilities here that if you start to see a market getting ahead of itself, does that actually perhaps create a little bit of a cushion? If the Fed under-delivers on that hawkishness, does it actually boost the markets? That's going to be a lot of questioning about how do you actually position for this at a time that's coming right off the heels of the worst bond sell-off in history on a quarterly basis when you look at the first quarter sell-off.
Okay, Bloomberg's Kriti Gupta, thank you. Just checking in on the redhead that's crossing the screen right now. Traders pricing in a 50 basis point hike by the ECB by September. So markets continue to readjust to the more hawkish commentary that we've had out of the European Central Bank, of course, adjusting to the inflationary picture here. It's not just the traditional hawks, but it's also the Spaniards coming out suggesting that you've got to be raising rates within this environment. Just checking in on the German 2-year yield. Again, yields up 6 basis points, and of course, sovereigns here adjusting to that more hawkish stance from the ECB and money markets pricing it in. Let's get over to Ukraine now, what the situation is doing and how things are unfolding. President Vladimir Putin says Russia has seized Mariupol, but a top Ukrainian official has told Bloomberg it is too early for Moscow to say it has taken the key port city.
The Ukrainian armed forces are still in town. Yes, most of them are blocked in these Azov steel plant, and as well as many civilians which are at that same steel plant, mainly their relatives. My president yesterday suggested to have an exchange of those civilians, of those soldiers who are wounded, to the Russian wounded soldiers which are in Ukraine's possession. Unfortunately, we didn't receive no answer.
Okay, let's get more with Maria today, our European correspondent who joins us from Brussels. Maria, what do we know about the situation in Mariupol and the broader conflict that's now unfolding in the Donbass?
Yes, and Tom, there's a battle that is clearly happening on the ground, but there's also an information war and a propaganda war on both sides. When you listen to the Russians, what they say is that they now control Mariupol. Yesterday, Vladimir Putin said this was a victory. Congratulations, everyone. That was his comment on TV, and also said he was not interested in that steel plant where there's still 2,000 Ukrainian soldiers stationed there. He said, all we need to do at this point is just seal it. We're not going to crawl into it. Well, the Ukrainians, and you heard it in that clip yesterday, my interview with Ihor Shovka, he is the diplomatic advisor to President Zelensky. He says for as long as that plant holds, this will be a Ukrainian city. But I guess the point now, and this is really what matters, and this is really the reason why Mariupol is so strategically important for both, is that this is the bridge that Russia has wanted to create for 10 years now. It's a bridge that connects Crimea to Mariupol and then all the way to Donbass. And today we have comments already from a Russian general saying that in this new stage of the war, Russia will focus on securing that connection between the south of Ukraine, the east of Ukraine, and then into the Russian Federation. So you can see here that this battle is not just going to get ugly on the ground, but inside is also expanding.
All right, Maria, thanks very much. Maria Tadeo there, our European correspondent in Brussels, bringing us up to the latest. Now, let's get to Washington, D.C. Yesterday, President Biden temporarily caused confusion with his response to key issues facing the administration on immigration. He thought we were talking about mask policy with him. Let's get to Emily Wilkins, Bloomberg government reporter, for details on the mix-up. Emily, do we know what was happening?
So, Matt, we know that these were two, obviously, pandemic-related issues. One, Title 42, dealing with the ability for migrants to come into the U.S. That's been very restricted during COVID. And, of course, the other one, as you mentioned, that federal mask mandate. Biden was asked about the immigration provision. He gave an answer, meaning the mandate. The White House did clarify later in the day. It comes at a point, though, where a lot of individuals within Biden's party, the Democrats, are initially questioning his decision to roll back this immigration provision by May 23rd. They're saying that they need more time. They need to come up with a plan for immigrants who are coming to the southern border. And they're worried there's going to be a giant surge. And again, these are lawmakers within his own party. It also comes as a time where Republicans have really been targeting the president, questioning his mental health, questioning his ability to do his job. He's currently 79 years old. He's one of the oldest American presidents. And this isn't the only gaffe that we've seen from Biden in recent weeks. And every time this happens, you do see the Republicans really push back against Biden, question whether he's going to be able to serve a second term.
Indeed, a time when, of course, his polling has plummeted. Emily Wilkins of Bloomberg Government in Washington. Emmanuel Macron now closer to winning another term as French president. That's as nationalist leader Marine Le Pen runs out of time to narrow the gap between them before the presidential runoff ballot on Sunday. Let's get more with Bloomberg's Francine Lacroix, who's leading our coverage of the election in Paris. Is it all clear for Macron at this point, Francine?
Bonjour, Tom. Now, we just spoke to one of his closest advisors, and he says, look, it's never a done deal. But if you look at the polls, they've certainly been widening. He has around a 50%, 56% actually chance of becoming president. And that gives it, well, 56% in terms of people that vote for him. And that's about an 85% chance of becoming president. But then, of course, you need to ask yourselves what kind of majority, if any, he would get in June. So the question is, Tom, does he change his policies to try and appease some of the people that didn't vote for him? Does it mean that we're going to see a more fiscal spending, fiscal loose France? And what does it mean for the policies going forward? But certainly for the moment, the markets are pretty much placid. I mean, they think that he'll be president, and they're not really concerned about anything else France induced.
There is another issue related to France right now. We see they've issued an arrest warrant for Carlos Ghosn, who's currently remaining a fugitive in Lebanon, right?
Yes, I mean, this is the ex-car supremo. I mean, this is surprising, Matt, because the lawyers on the Ghosn side also seem to be making out this could be linked to the election. They, I think, mentioned something about the timing, the fact that France now have issued this international arrest warrant to coincide with the election. Basically, they're implying that it would look good for maybe the people in power if he were to crack down on the rich. Now, there was very clearly a lot of anger in France about how much Mr. Ghosn was paid. Very interesting. I don't want to get into the nitty-gritty of the legal situation too much, but he initially wanted to be charged in France because then he had access to documents. So it's something that we need to follow very closely, and I think also we'll be speaking to him a little bit later on, so it'll be interesting to see how he positions, and I think for the moment he's really surprised that it's happened.
All right, Bloomberg's Francine Lacqua in a beautiful Paris. Thank you so much. And Francine, as she mentioned, we'll be speaking with Carlos Ghosn later today at 11:15 a.m. New York time. And of course, don't miss Francine also in our coverage of the final round of the French presidential elections this Sunday, 2 p.m. in New York, 7 p.m. in London. Now let's get back to the markets and take a look at some stocks moving in pre-market trading here in the U.S. One of the big underperformers, Gap. This stock dropping like a stone. It's down about 12% in early hours after cutting its sales forecast. It also said that its CEO and president of Old Navy will be leaving the company this week. So that is weighing on the shares this morning. We also got a report out after the bell yesterday from Snap. Of course, this operates the Snapchat app. A lot of kids use that one. It actually did report better users than expected. Those were up about 18% year on year, but the forecast wasn't as great. So that is weighing on the stock a little bit this morning, down nearly 2%. And elsewhere in social media, we of course have to check on Twitter. The news came that Elon Musk maybe indeed has secured funding for his bid. $25 billion in debt commitments from banks, including Morgan Stanley, another $21 billion coming from him. How will this develop over the weekend? This is a really interesting one. Right now, Twitter is up about 0.8% before the bell, Tom.
Yeah, laser focused on that story, of course, for lots of obvious reasons. More on Musk's bid on Twitter coming up. Could the billionaire go higher than his best and final offer? And on the markets, Dan Boardman-Weston, Chief Executive and CIO at BRI Wealth Management, get his views on these markets. Plus, on the French election, of course, Alexandra de Hoop-Scheffer, German Marshall Fund's director of the Paris office. If Marine Le Pen pulls this off, what would it mean for the economy of France and the geopolitics of the Eurozone? Stay with us. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Today on Bloomberg, Treasury Secretary Janet Yellen speaks live with Bloomberg's David Weston. Tune in at 11:45 Eastern on Bloomberg Television and Radio. Bloomberg, your unmatched source for global financial news.
This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London with Matt Miller and Kaylee Lyons in New York. So, after more than 2 weeks of questions over whether Elon Musk is really serious about his Twitter takeover, his bid just got a lot more real. The Tesla boss has lined up more than $46.5 billion in funding, and he's got skin in the game. He's going to throw in a big chunk of his own cash through equity financing. Laura, where does he stand in terms of this bid? He's managing to get the cash together. He's been reaching out to some of the investment banks. It seems like they're lining it up.
Yeah, $21 billion equity commitment from Elon Musk, although it's much more than he has in the bank at the moment. So he's likely to bring in an equity partner. As you mentioned, investment banks will bring in around $25.5 billion. Morgan Stanley is going to be the largest player. Now, this financing, Tom, implies an 18% share price premium to that original unsolicited offer. Twitter's board, they've still not responded to that, albeit they've started implementing some defensive measures. A higher share price premium is advantageous for a tender offer because you have to persuade at least 50% of the shareholders. What a roller coaster ride it's been, though, since April the 4th, when we first learned that Elon had become the platform's largest shareholder.
Laura, I want to ask, I don't know if it's hitting as hard in London as it is here, but a lot of New Yorkers in media left various companies to go join CNN Plus, and they just rolled out to great fanfare last week. They have, I think, 100,000 subscribers, and now they're closing shop already. What is happening at CNN?
The cost of content is expensive, Matt Miller. Netflix, for example, they're coughing up $18 billion this year. And that recent merger between Warner Bros. And Discovery, they're undergoing a cost-cutting scheme. And it seems that the already $500 million that they've spent on launching out CNN Plus was simply too much to take. It's a competitive space.
They just spent $500 million this year.
They did, but, you know, they're cutting their losses, Matt Miller. Get out while you can seems to be the approach, while the streaming industry is highly competitive and, you know, retaining subscribers. As we learned from the first mover advantage holder this week, Netflix, it's not easy.
The streaming struggle, 400 jobs, I think, tied to that as well, CNN Plus. Thank you, Laura, for bringing us up to speed on that development, as well as all things Tesla, Twitter, I should say, and Elon Musk. Stay with us. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lines with Matt Miller in New York and Tom McKenzie in London. Now, keeping you up to date with news from around the world, here's the first word. Shanghai has vowed to step up enforcement of lockdown measures to prevent community spread of the coronavirus. China is in the midst of its worst outbreak since the pandemic began. Shanghai's 25 million residents have been in one form or another locked down for weeks now. The city reported a record 11 deaths yesterday. The U.S. again is threatening China, meanwhile, of sanctions if it offers material support for Russia in its war in Ukraine. Deputy Secretary of State Wendy Sherman said China wasn't helping the situation in Ukraine by doing things like amplifying Russian disinformation campaigns. She also promised to help India end its dependence on Russian weapons. President Biden will sign an Earth Day executive order today aimed at safeguarding old-growth forests. Those forests have come under threat from wildfires and drought. Scientists have identified old-growth trees as critical to fighting climate change as they function as reservoirs for carbon dioxide, a key greenhouse gas. And the feud between Florida's Governor Ron DeSantis and Disney has gotten worse. The Republican-controlled legislature has passed a measure to strip Disney of its self-governance privileges in the state, where it employs 70,000 people at its theme parks and hotels. The fight started when Disney criticized a law DeSantis backed that limits school instruction about gender identity and sexual orientation. And Tom, for our global audience, this is essentially a culture wars story surrounding Florida's quote-unquote don't say gay bill, as it now has been dubbed, which Disney initially was reluctant to do. They didn't want to wade into those waters, but pressure walkouts from Disney employees forced Bob Chapek to eventually come out against the bill, and now there are political consequences.
Yeah, I've been trying to understand this story. Of course, Florida's at the top of the list in terms of holiday destinations for Brits. And one of the first things you do, of course, is go to Disney. So the politics, as you say, impacting the corporate sector. And that there are these privileges they had, but they may now go, right?
Exactly. So it's definitely a saga that continues to unfold.
Okay, plenty more coming up. Stay with us. This is Bloomberg.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition, and here is what you need to know. Federal Reserve Chair Jerome Powell has outlined his most aggressive approach to taming inflation to date. He has potentially endorsed 2 or more half percentage point interest rate increases. At the same time, Powell described the labour market as overheated. In France, Emmanuel Macron is closer to winning another term as president. Nationalist leader Marine Le Pen is running out of time to narrow the gap between them before the runoff election on Sunday. Polls indicate Macron has about a 12 percentage point lead. And Elon Musk's attempt to buy Twitter has gotten a lot more real. The world's richest person has lined up more than $25 billion in debt financing from Morgan Stanley and other financial institutions. Musk is also pledging to contribute another $21 billion of his own money through equity financing. I'm Tom McKenzie, stepping in for Anna Edwards in London, Matt Miller and Kaylee Lines in New York. Matt.
Yeah, what we're seeing, I think, is really interesting here in markets, Tom, because this is the second time this week that we've had a cemented hawkish position from a Fed speaker, this time from Jerome Powell himself. And we don't really see a lot of negative reaction in equity markets. This, to me, says a lot of it is already priced in, right? He said 50 basis point rate hike is on the table. Nomura came out and said you could see 2 75 basis point hikes following that. Remember when Bullard brought up a 75 basis point hike? I thought that was going to spook the market as well, and we actually traded positive by the end of the session. So the S&P futures are down, but only by 0.1%. We see the 10-year yield up, but only to the highest level since December of 2018, and that's a level that we've seen pretty consistently over the past week. So not a heck of a lot of movement spurred by the comments that you would think drive markets mad normally. NYMEX crude is coming off 102.02. That could be a little bit of the support when you see that come out. It relieves some pressure on the market, on the equity indexes. And then Bitcoin is down, but not really moving much, hovering around the level we've seen all week, 40,457. Kaylee, what do you see in terms of the pre-market movers?
Well, I am taking a look at social media stocks in the pre-market in particular, because of course you had one of them, Snap, reporting after the bell. It operates the Snapchat app. It had really stronger user growth than was expected in the first quarter. Users up about 18% year on year, but the sales forecast going forward wasn't so rosy, and that is weighing on the stock this morning. It's down about 1.4%. A mixed read-through for some of its other social media peers. Pinterest is lower today. It's down about 1.6%, but Meta Platforms, which of course operates Facebook, is higher by about 0.6%. And outside of the earnings earnings story, the user growth story. One story that we continue to follow is Twitter and Elon Musk's bid. Maybe financing is indeed secured after he said he had $46.5 billion in financing commitments lined up. More than $20 billion, $25 billion of that in debt financing from banks like Morgan Stanley. Another $21 billion is supposed to come from equity financing from Musk himself. The question is, where is he going to pull that from? We still don't know that answer. We still don't know how Twitter is going to respond. They said they've received the updated proposal. They're going to take a close look at it. Right now, Twitter's up about 0.9% before the bell.
The really awesome part, Kaylee, is that, you know, he said this is all about free speech and democracy. He doesn't even care about the economics. The financials mean nothing to him. And yet, banks are willing to lend him $25 billion to do the deal. So altruistic of them. I'm really, my faith is restored. I want to break some news here that the timing is incredible on this, Tom. Renault said to explore pairing its Nissan stake to support the EV shift. Now, this is, to me, almost ironic because one of Carlos Ghosn's charges is that he has been ousted. It was a smear campaign in order to reduce the strength of the partnership that he built between Renault and Nissan. And indeed, on the day that we see France issuing a warrant for his arrest, Renault says they're going indeed to reduce that strength by pairing their stake in partner Nissan. So I think really interesting stuff.
Yeah, and clearly investors are rewarding that decision, at least the details of that as it continues to come through. And there's an argument that maybe it reduces that political tension that we know did come between the French and the Japanese partners, of course, if they reduce that stake and the funding that's needed to power EVs. Let's check in on the markets then across Europe. You're down 1%. There's a readjustment, of course, factoring in the earnings, but also readjusting to the more hawkish Fed, yes, but also ECB officials who over this week have come out with a more aggressive stance, at least rhetorically, and you're now getting the markets pricing in a 50 basis point move by September. So you continue to watch that as well, of course, as what's unfolding in Ukraine. We keep a firm eye on France. The CAC 40 is lower by more than 1%, 1.2%. Bloomberg Intelligence saying you could see a re-rating of French equities if Emmanuel Macron, the incumbent, of course, proves victorious in that Sunday runoff election versus Marine Le Pen. So we're watching that. Worth noting, by the way, manufacturing services data for Europe came in stronger than the forecasts at a time, of course, when many economists are downgrading their outlook for the Eurozone economy. Euro-dollar is under pressure, 0.3%, largely, you would imagine, as a result of dollar strength. And the German two-year yield up 5 basis points, coming off a little bit. It was up 6 basis points, but again, readjusting, repricing around the sovereign bond space here in Europe. The sovereigns, the peripherals, certainly an area potentially of concern if you get a more aggressive ECB, what it means for BTPs and Spanish yields, for example. Over in the Russian markets, you're seeing losses of more than 1% on the benchmark MOEX. You got strength, though, in the ruble, up 3%. You had some comments from the German Chancellor Olaf Scholz to Spiegel, suggesting that he's not keen still on pursuing an embargo of Russian gas. He says that wouldn't bring an end to the war. Again, ruble up 3% in the session today, and that's the 10-year on the Russian bond space. Not much movement, 3 basis point move, but of course the question marks about whether or not Russia defaults remain in focus for us. Matt?
All right, I'm looking at a chart that goes way back. Indeed, as I look here at the legend, all the way back to the first time I ever saw fish. We're talking like Nirvana, Pearl Jam, 9 Inch Nails to the early 90s. This shows the hawkishness of the Fed, and you can see the big mountain in the middle there is an Alan Greenspan monument. But we've seen a huge jump. In fact, the most aggressive Fed hawkish shift that we've seen I guess in 20 years, basically. Joining us now is Dan Boardman-Weston, Chief Executive and Chief Investment Officer at BRI Wealth Management. Dan, the striking thing to me is that from Bullard to Powell to Nomura now, it doesn't seem to rock these markets very much. Is all this priced in?
I think a lot of it is priced in. I mean, it's been quite a dramatic shift for markets throughout the first 4 months of this year. And a lot of it is baked in, and thus you're not seeing markets move a huge amount, or equity markets. I think the interesting thing will be, in the past, an aggressive Fed tightening has always caused the economy to fall over. And whether this leads to recession at some point during 2023, I think is the question investors are trying to grapple with.
What do you think the answer to that question is, Dan?
I think the economy is going to slow materially, I think across the world, not just because of tightening central bank policy, but a host of other geopolitical factors. I think it's a moot point whether we flirt with recession or not, but I think growth is going to slow a lot, and it wouldn't surprise me if we enter a recession next year.
Okay, well, when we talk about the bond market reaction to all of this, to the implications for growth, but also to a more hawkish Federal Reserve, we're left with a 2-year yield at 2.75, a 10-year yield at 2.94. Are we reaching the point now where bonds actually are an attractive buying opportunity?
I think you are. You've seen a lot of big bond investors come out over the last few weeks saying at these sort of levels, bonds start to look attractive. And if your market hypothesis is that actually the Fed is going to go too far, it's going to tip the American economy or the world economy into recession, then 10-year bonds at 3% starts to look attractive. And so whether this is the top of yields, I don't know. But I think at these sort of levels, bonds are getting increasingly attractive.
Dan, if you're looking for shelter within this environment with all the geopolitical risks and, of course, the macro around the central banks, where are you looking? You're looking at equities or other assets at this point?
So we're looking at removing some of the cyclicality out of our portfolios, so economically sensitive stocks, and moving more into defensive equities. We've also got quite a large exposure to infrastructure assets, certain parts of the commercial property market, notably sort of industrial, and also we've got a large amount of cash as well for clients, which ideally we will look to reinvest into bonds. And I suspect we will get the buying opportunity within the coming couple of weeks or months to deploy that capital.
Dan, are markets underestimating the potential drag from China?
I think so. I think with what's going on in the world, with all eyes are on Ukraine, and quite rightly so, I think markets aren't really paying much attention to China's zero COVID policy and what impact that's going to have on the world economy and also on supply chains. I mean, if we go back to early 2020 and when we saw the initial supply chain issues with China locking down, I think markets are underestimating that. And I think what that does is it probably extends the runway somewhat for this inflationary period that we're going through, as China does seem set on a zero COVID policy, which is going to lead to economic disruption in China and across the world.
Can I just ask you, as we prep for this, I guess, final round of voting in France, how much does it matter? I mean, are you actually concerned that Marine Le Pen, that the far right could take over Europe's second largest economy?
I think if we've learned anything over the last 5 years, it is take the polls with a pinch of salt. No one predicted Brexit, no one really predicted Trump coming to power. And I think with Macron at 55% and Le Pen at 45%, which is the latest polls, I think she could easily do this. Do I think this is a good or a bad thing for France? I think it's probably a bad thing for France and a bad thing for Europe. But again, I think all eyes are focused on the Ukraine crisis at the moment. And so the market fallout from a Le Pen victory, I think, will be relatively muted. I think Ukraine and inflation are the primary drivers at the moment. And a Le Pen victory, I think, won't drive markets to a huge extent.
Interesting, Dan. A Marine Le Pen victory would not have a major effect on the markets. That seems to be against the consensus. Great insights. Thank you for your thoughts. Dan Boardman, Weston, Chief Executive and CIO at BRI Wealth Management. Just to recap, one of the breaking stories, a redhead across the terminal, Renault shares rising, currently 5.2% on the news that the company is considering selling part of its Nissan stake. That is partly to fund its shift into EVs. We're going to hear from former Nissan chairman Carlos Ghosn.
Hello, day traders again.
New York time, that's 4:50.
I'm going to place an order. As you can see, we place stop and profit for Bitcoin at 41,000. Right now, I need to move to better level, and I'm going to place our stop to 40,795. It will give us 1.5% in profit. It means £1,500 in our pocket. Okay? To trade, everything comes to him who wait. So all of you guys, if you copy this trade, please place your stop at this level and wait. If it will move to different direction, we will fill the order with the profit. If it will move lower, we will move lower the profit. It means, because we sold short, it means in our advantage, we will sell at a better price. Okay? For our strategy, you have to go to company.co.uk. Also, you can register for our webinar, live webinar. I will do personally, so you can ask any questions you want. Okay, guys, stay safe, and I'll speak to you later. Good day, good trade.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Tom McKenzie in London. Well, let's get back to the French election, where Emmanuel Macron is closer to winning another term. Francine Lacqua is joining us now from Paris with Alexandra Daube-Scheffer, director of the Paris office for the German Marshall Fund. Francine?
Yeah, thank you so much. I was looking actually at the latest polls, Kayla, just to make sure that we're not missing anything. The trend seems to be there. The spread, if you call it, between Macron and Le Pen is actually widening. We look at a 56% vote for the moment for Emmanuel Macron on Sunday. So we are delighted to be joined by Alexandra. Thank you so much. This is, of course, a conversation on politics, international, and what this means if Emmanuel Macron, like the polls seem to suggest, we could see an upset, but at the moment they give him president. What does his policy, how does his policy change domestically and internationally in the second term?
Well, I think the first thing he will obviously have to do is change his, what I would call his leadership style. He will have to change his leader style domestically and internationally and on the European level. What's really interesting, we have several offices across Europe, is that our European partners are not looking at Macron the same way they did back in 2017. In 2017, he was perceived as Europe's savior, right? Against, again, Marine Le Pen. This time, 5 years later, there's much more skepticism, there's much less enthusiasm, because he has also been quite disruptive and shown a certain amount also of unilateralism across the EU so in his way, of portraying French policy.
So, Alexandra, so what is the problem actually with the way he portrays himself? The French, and this is the voters, basically see him as elitist, out of touch, not really, concerned with the cost of living and things like that. If you look at the policy, he did try and help and temper inflation. What's the perception for abroad? That he fights too much for France? That he goes at it alone?
It's that when he speaks in the name of Europe or of the EU, people see him as speaking for French interests, right? Yeah. And so this has sometimes brought a lot of frustration. I'm talking, for example, of European strategic autonomy, which is very much impulse from Paris. And this concept and the way Macron portrayed it was not often understood, sometimes seen as autonomous from the US, from NATO. And he has done, I must say, this last year, a lot of effort explaining it in a much more constructive way.
Alexandra, talk to me a little bit about if Marine Le Pen becomes president. Again, we cannot discount this at the moment, even if the probability is quite low. What does she do with NATO? What does she do with Russia? What will be the place of France within Europe?
Well, the first thing I think that she can easily do is actually implement one of her decisions, which is to withdraw France from NATO's military integrated command. Just by sending a letter to the other allies of the Atlantic Alliance, but that would have a direct impact on France's credibility within the alliance. Within the EU, what I see her doing, she has really been moderating, nuancing her position of the EU. She's not talking of a Frexit, she's not talking of France getting out of the Eurozone. So what I see her doing is pretty much not a lot, is taking a step back, but trying to impulse a reform from the inside, right? And that, to a certain extent, resembles very much what Macron has tried to do these last 5 years on many levels.
Well, and let's talk about Macron a little bit more, because you mentioned, Alexandra, earlier that there's a perception that he's speaking for French interests, not European ones. And he has said previously that the French don't need Russian gas, but Europe as a whole is reliant on it. He has said he would continue to support sanctions on Russian gas. If he is re-elected, do you think he will have success pushing for that on the European level, or that other political pressures will force Europe to finally make that move?
No, absolutely. I mean, that's really Macron's goal. And it's true that in the context of the war in Ukraine, Macron has really been leading the European effort, right? The European response. Also, I would say by default of a strong German leadership, right? So he has really put himself into that leading role. And obviously, he is also pushing for this oil embargo. So definitely, if Macron gets reelected, that's going to be one of his European priorities, to convince his European partners that we need to move forward in that path.
What will his relationship be, Emmanuel Macron or actually Marine Le Pen, with the U.S. for the next 5 years? I mean, I remember this, pretty ugly spat with submarines, and that was like 6 months ago.
Yeah, well, what was interesting is that this AUKUS alliance really triggered once more a national debate about France's role relationship with the U.S., with NATO. Macron, despite his brain-dead, debate and everything he triggered, is probably the most Atlanticist French president. Marine Le Pen is very much more skeptical about that. She has a very NATO skepticism, EU skepticism, and much less, I would say, eager to show a certain amount of alignment with American policies.
Thank you so much for joining us, Alexandra. Alexandra de Upscheffer of the German Marshall Fund, as well as Bloomberg's Francine Lacqua in Paris. And of course, be sure to stay, Tom, with Bloomberg this weekend.
Yeah, indeed. We're going to have special coverage, of course, of the French election. That's Sunday at 2 p.m. in New York, 7 p.m. here in London. Stay with us. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York. Tom McKenzie is with us out of London. Now, Tom Keene is a co-anchor of Bloomberg Surveillance. He joins us to talk about what's ahead on the program, and I believe you have a chart of wheat. Tom, what's your single best chart?
Well, it's a chart of wheat because this is what matters in France. First of all, Sudhir Hazar-Singh, who I interviewed in 2017 out of Oxford, is definitive on the French people, and his essay this morning in the FT is absolutely extraordinary, from the Fourth Republic to the Fifth Republic to the Sixth Republic of Mr. Macron and Madame Le Pen. Matt, it's real simple. It's wheat, and it's the moonshot from the tenure of Mr. Macron in 2017 with the beginning of the pandemic, and up we go, you know, higher and higher we go. The baguette reality. Matt, I'm going to cut out here. My audio just collapsed.
Okay, Tom, I was going to ask you about BlackRock's Jean Boivin. I know he's turning up on the show as well, whether or not you're going to be asking him, of course, about what happens with the French politics. I know Bloomberg Intelligence, interestingly, Kaylee, saying that you could get a re-rating of French equities if Macron succeeds in holding on to the presidency. Kaylee?
Yeah, of course, we all wait for Sunday for those results. Meantime, what are we watching today on this Friday? Happy Friday to everyone. I will be watching later on around 11:45 a.m. Eastern Time. Treasury Secretary Janet Yellen will be joining Bloomberg Television. She's going to be speaking with David Weston. I'm really looking forward to getting her thoughts on so many different issues. Of course, you have sanctions on Russia and the latest U.S. thinking from the Treasury on that front, but then also just the broader economic environment as there is growing talk about potentially recession risk in 2023 here in the U.S. What are her thoughts on that and on Federal Reserve policy, Matt, as she's not just the Treasury Secretary now, she was chair of the Federal Reserve.
Absolutely. It will be fascinating to get her take, and I can't wait for that David Weston interview. I'll be watching Balance of Power as well. But I'm preparing for fish. Now, a few important dates that you should know. New Year's Eve, typically fish plays traditionally a Madison Square Garden run over New Year's Eve. They had to cancel that this year, but they wanted to reschedule this month, and they couldn't do that unless the Knicks got thrown out of the playoffs, because otherwise the Knicks would need to use the Garden. So fortunately, on March 31st, the Knicks lost their final game in the playoffs and opened up the way for fish to kick off their run, which they started on 4/20. But today, 4/22, is the day that they will reprise the actual New Year's Eve show, on which they typically play a bunch of covers and do some fun gags. And then, of course, they're going to play tomorrow. I have tickets for tomorrow night, but I'm still kind of looking for a miracle for tonight in a number of different ways.
It's hard to follow that, Matt Miller. Number 10, Farmhouse. That's Rolling Stone's decision in terms of where the song comes. I know it's your favorite. Lushington, they've got at number 1. Anyway, that's what Matt Miller is watching. Matt, come in.
Well, I mean, Farmhouse, I think, is the most popular album. I like songs from Tweezer to Gotta Jaboo to You Enjoy Myself, but you should check them out.
Okay, you've also got to watch the French election, of course, consequential not just for that country, but the Eurozone and global geopolitics as well, arguably. Stay with us, Early Edition Surveillance with Tom, Jonathan and Lisa up next. So this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The American consumer right now is actually weakening.
High prices, high inflation, they're disruptive. Like, they make life challenging.
There's nothing wrong with being a picky stock buyer in this environment.
High yield spreads are still quite range-bound and resilient.
Over the long term, people should remain calm because that's the path to prosperity.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures down 0.4% on the S&P and TK once again. A big move in this bond market on a 2-year yield.
Into Friday, and I'm sorry, it's moving, and the central banks are speaking, and we lock in, John, 50 beeps. I believe we did that with Mr. Powell and Madame Lagarde yesterday. And I'm sorry, John, the sterling in London into the French election, frankly, Lagarde's got a bigger challenge on where the 2-year yield is than Powell does.
Governor Bailey, even more so, Tom. The data in the UK, consumer confidence at 2008 low, retail sales softer. This is the great lesson for this moment, isn't it?
Wow.
Inflation starts to hurt the consumer starts to feel bad, and then it shapes what the consumer does, and we're seeing that in the UK. And then when you start to hike into weakness, the currency falls, it does not rally.
It becomes circuitous, and folks, on a Friday where we're trying to slip into the weekend, forget about that. By the time I walk with my entourage from makeup over here, John, I got sterling under a 129, 128.72. That's a wow statistic.
Bramo, that is a 1.2% move this morning.
And I can say that Kit Jukes really accentuated the concern here, saying that even if rates do go up at the Bank of England as much as people are expecting, it isn't going to cause the currency to strengthen, because we are talking about hiking into a slowdown. And honestly, this to me is really the dilemma that central banks have around the world, but in particular in Europe. And you heard that to some degree yesterday at the IMF panel.
There's something happening at the moment that's not been talked about enough. We're obsessed with the front end of the yield curve and all the rate hike talk, the hawkish talk, the Nomura note, a 75 basis point hike in June, again later on in the summer. Lisa, it's what's happening at the long end with inflation expectations that gets my attention. I know it gets yours as well, because even with all this hawkish talk, break even to going the other way.
To me, this should be a little bit concerning to a lot of people, particularly at the Fed. This goes to Fed credibility. Is the Fed losing credibility that it will go quickly enough to curtail inflation? Right now, the message being sent is not necessarily, and that is certainly what you're seeing when you see five-year forward break-evens, basically the expectations of inflation over the next 5 to 10 years, rising to the highest levels going back to 2014, even with everyone trying to out-hawk each other.
Okay, they're out-hawking each other, but John, let's look at the two clearing calls of the weekend. They're lonely, we'll take them. Bank of America, bonds, yields lower. And then David Balin yesterday representative of Citigroup was absolutely stunning.
Do you think they'll get a hold of the inflation story, Tom? That's going to shape the long end. That's voice of David Belin yesterday on the show over at Citi. Bonds are back. The idea you can get them back in a portfolio. Yes, that works if you believe this inflation story is going to come under control, that this Fed will do enough. That's a question mark. That's still a debate right now. Tom, we also need to talk about Germany. The Bundesbank just came out with a note and basically said the economy more or less stagnated in Q1. At the same time, we're talking about an ECB set to come to market and hike interest rates through the summer, Tom. Yeah. It's going to be tough if Germany keeps posting those kind of numbers.
It's an absolutely original set of ideas here off the pandemic and that fiscal stimulus and now the war. And again, Folkert Landau saying Germany not only has that, but has a massive fiscal spend here to happen with the energy change over 5 years, 10 years, 30 years. There's a short-term story to Germany, John, and there's a long-term story equally as important.
Let's get you started as we race towards the weekend with some price action. We're negative 1/3% on the S&P, on the Nasdaq 100 down 0.4%. Yields bleeding just a little bit higher at the long end on a 10-year by 3 basis points. 293.94 and a big move on a 2-year. So far this week, the 2-year yield, Bramo, I think is up about 30 basis points. It's
unbelievable.
A big move.
And if you take a look at expectations, we are now seeing 3 consecutive 50 basis point rate hikes getting priced into the market, not speculated on, priced in, with Nomura really, as you said earlier, John, boosting that to 75 basis points in 2 consecutive meetings following a 50 basis point rate hike. We'll hear more on this and sort of the dynamic that we're seeing in that long end at 10:30 a.m. There is an IMF seminar that is titled Inflation Dynamics in a Fragile Global Economy. It highlights the dilemma quite well. Bank of England Governor Andrew Bailey will be there, as well as IMF First Deputy Managing Director Geeta Gopinath, others as well. I want to highlight that chart I mentioned. Inflation expectations over the next 5 to 10 years surging. This comes even as we're talking about 3 consecutive 50 basis point rate hikes. That is the fastest pace of Fed tightening going back to 1982 in January. If that doesn't curtail inflation, what is the market looking for? Is the market right? Is this a concerning issue, especially for all the people who are starting to get bullish on bonds? 11:45 a.m., Treasury Secretary Janet Yellen will be joining Bloomberg Television. I want to hear what she has to say about oil. Yesterday, she came out and she talked about the concern of the economic blow to the euro region if they were to ban oil from Russia immediately. So she's going to be talking perhaps about how Russia can pay for the rejuvenation of Ukraine. And I'm curious what she says on that. And on Sunday, we get that final round of voting to select France's next president. We do expect Emmanuel Macron to become the next president. He is leading in a poll, not giving a big boost to the euro. And I think this is interesting, John, because we were talking about this as the tail risk, dragging the euro down. Macron is clearly leading Le Pen. It doesn't seem to be an issue.
Let's start with the euro this morning. And Lisa, thank you. With Jane Foley, head of FX strategy at Rabobank, with cable down 1.2%. That currency pair, 128.74. That is a weaker pound sterling this morning. Jane Foley, what is the lesson of UK markets this morning?
Well, we did see those hawkish remarks from Catherine Mann. She's a Bank of England hawk, talking about that 50 basis points move as a possibility in May, but she was really outdone by 2 things. The first were the more hawkish marks, or the similarly hawkish marks from the Fed, from Powell, and of course that data that you've just mentioned, that real plunge in retail sales. But really there's been a hat trick in nasty data from the UK today. You mentioned the consumer confidence number 2. That's down at levels that normally precedes a recession. So that's pretty bad. And if you look at the PMIs, well, the PMIs look okay. But if we look at the numbers, well, they were generally disappointing relative to market expectations, particularly in the service sector. And if we pick it apart a bit more and we look at new orders, they were down too. So again, we're looking at the possibility of a raised recession risk for the UK. Certainly a cost of living crisis. We've talked about that before for the last month or so. And at the same time, many consumers are going to really falter even further under the weight of what is likely to be more interest rate hikes from the Bank of England.
Jane, I want to take FX and go off to the back right side of the GDP equation on net trade. That starts and ends with not only individual trade growth of the United Kingdom, of the United States, but aggregate global trade. Grenache and the IMF make clear they're seeing a trade slowdown. Is that the true overlay here of just a dampening of global trade and what it will mean for FX and the dollar?
Well, we've talked about supply problems for quite some time, really, all the way through the pandemic. And we know that we've got more supply problems now. We've got energy issues, particularly in Europe, of course. And that is obviously going to come to fruition in the form of trade issues. And that's what supply issues effectively are. But what's quite interesting, and I think the foreign exchange story really does illustrate this, is if we look at the currencies, certainly in the G10 that have been outperforming and the ones that have been underperforming, what we see is that the energy exporters or the commodities exporters, I should say, have been performing the best. And that is because their terms of trade have increased as the prices of commodities have increased. And the reverse is obviously true for the commodities importers, the yens, Japan, for instance, and most of the Europeans, with the exception, obviously, of Norway. So if you like, people, countries that can export into these higher priced commodities, those countries are bound to do better during this particular crisis.
And we certainly have seen that so far, Jane. Before we let you go, right now, are we pricing in a recession in Europe and not a recession in the U.S.? Is that what effectively the euro is telling you? The pound is telling you something similar over in Britain, or is this a more nuanced story?
I don't think we're necessarily pricing in a recession. Most forecasts, are suggesting that we will still have growth in the UK, growth in the rest of Europe, for instance. But those forecasts have certainly been pared back because of the higher price of gas, because of the higher price of oil as well. So this is really quite nuanced. But we have had, another headline, this one, of course, from the Bundesbank this morning, suggesting if there were a full oil embargo from Europe on Russia, almost certainly we would see Germany in recession this year, and that is a significant risk. And that risk, I think, is obviously something that looms over Europe in a way it doesn't over the US. But I think if we're looking into 2023, the story of slowdowns then, is because of the hiking of interest rates that we are going to be seeing this year.
Jane Foley of Rabobank. Jane, fantastic to catch up with you as always. Tons going on in this FX market. Every time I've heard an ECB policymaker talk up rate hikes this week, I've thought of China. I've looked to the forecast from Nomura over the last couple of days, who now forecast a 3 handle on Chinese GDP for the year 2022. And Tom, we're starting to see something we did not see last year, which is some weakness in the Chinese currency.
Not only the weakness in the currency, John, I just modeled it. This goes back to the beginning of 2021. And again, it's a managed banded currency. Let's not call it truly floating, but it's a forced standard deviation move off a very managed strong yuan trend. And we've gone weak yuan here in the last number of weeks. And, anybody can pontificate about that. But I would say, John, over the weekend, we need to restudy where EM sits. We can go to the dog of dog Turkey and look at a 14.74. Am I willing to say Turkey's unraveling? No, but you got to watch EM led by China.
Elisa, the offshore currency, the weakest, the lowest since April 2021.
Yeah, and frankly, this really stems directly from the lockdowns. I was looking at a story that really highlights this, how oil demand in China is tumbling to the lowest since the peak of the Wuhan shutdowns, the peak of the pandemic. Given a sense of the sudden slowdown there and the fact that they're not backing away from that, what's going to rejuvenate the economy at this point?
I've got some good news. Doesn't the Fed quiet period start tomorrow?
That's your good news?
That's no more Fed speak, right?
Yeah,
Until May 4th.
Yeah, I think today.
I think a lot of people will be very, very happy with that. Tom Keene, Lisa Bramis and Jonathan Ferro taking you into the quiet period for the Federal Reserve just around the corner.
People
Futures down 16.
The Bramo quiet.
Negative a third of 1%. They want someone to be quiet. Yields higher by 2 or 3 basis points on a 10-year to 293.56. From New York City this morning, good morning to you all. Heard on radio, seen on TV for our audience worldwide. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Federal Reserve Chair Jerome Powell has outlined his most aggressive approach to taming inflation to date. He has potentially endorsed 2 or more half percentage point interest rate increases. At the same time, Powell described the labor market as overheated. The Fed chief is taking direct aim at strong demand that the central bank wants to cool. A crackdown by the U.S. and its allies has cut Russia's access to high-tech imports and parts by more than 50%. That's according to Commerce Secretary Gina Raimondo. She says the Russian military is having trouble finding spare parts for their tanks, satellites, and rocket mounting systems. China is stepping up efforts to stem the stock market slide towards a 2-year low. It's now urging big investors to buy more shares. Chinese securities regulator issued the guidance at a meeting with investors, including the country's giant social security fund. The benchmark CSI 300 index is down more than 18% this year. And Elon Musk's attempt to buy Twitter has gotten a lot more real. The world's richest person has lined up more than $25 billion in debt financing from Morgan Stanley and other financial institutions. Musk also is pledging to contribute another $21 billion of his own money through equity financing. Twitter says its board will review Musk's proposal. Bloomberg's learned that Renault may sell part of its stake in Nissan. It's a move that could raise billions of dollars to help pay for the company's shift to electric vehicles. It would also ease long-standing tensions between the two automakers. Renault's stake in Nissan is valued at about $7.7 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
Today, I'm announcing another $800 million to further augment Ukraine's ability to fight in the east, in the Donbass region. This package includes heavy artillery weapons, dozens of howitzers, and 144,000 rounds of ammunition to go with those howitzers.
The President of the United States from New York City this morning. Good morning. Equity futures are declining once again on the NASDAQ and on the S&P 500, down about 1/3% and 0.4% respectively. Yesterday, a messy session. This morning, yesterday morning was pretty decent off the back of some solid earnings from Tesla, United, American Airlines as well, and then we just faded into the back end. A lot of that fueled by this conversation about tighter monetary policy at the Federal Reserve, high yields at the front end and on the long end too, up by 2 or 3 basis points on a 10-year to 293.56. Just briefly on crude, down 2% today to 101.76. On Brent, Morgan Stanley actually upping their forecast for Brent for the third quarter to 130 from 120. Wow. Not on a better demand outlook, actually on a much, much worse supply outlook. That's their call from Morgan Stanley in the last 24 hours, Tom.
This has been a backstory this week, and John, frankly, this weekend I have to begin to tackle the 100 pages from J.P. Morgan on ginormous miscalculation of oil demand.
This is what they say.
That's what I'm doing this weekend, folks.
Demand is likely to recover more slowly than we previously anticipated, but this is more than offset by a weaker supply outlook driven by Russia and Iran. We now see a greater deficit ahead.
Interesting.
That's
So
the
they
call
go
from
the
the
other
team. Yeah, 130 from 120.
And folks, this is critical. This is the microeconomic foundations of all this, and we're going to do that with Amrita Sen, who's truly expert on it, in a moment. Right now, expert on this weekend, the tumult of the war, as we heard from the Marine Elliott Ackerman yesterday, Maria today on Brussels, Emily Wilkins in Washington. Emily, how alone, to both of you, but Emily, let me start with you. The president speaking of the contribution of the United States. Is anybody else from where you sit, Emily, ponying up the size of money of the United States?
Well, Tom, it's not just that $13 billion, although certainly that is major news out of Washington from yesterday, but it's also the additional amount that we're going to be seeing the White House request in coming days, asking Congress to go ahead and approve that additional funding. Now, we don't know how much that is, but we do know that there's still that strong bipartisan consensus in Washington to move additional funding for Ukraine. So that $1.3 billion, as you correctly point out, you've got about $800 million, and that's for weapons and technology, and that's going to include what Biden said yesterday is a different kind of weapon that really reflects the changing nature of the invasion in Ukraine.
Maria, today, early in the week, Bloomberg had a chart which showed how lonely the U.S. was in actually ponying up money. Am I wrong on that? Is Europe ponying up a lot of millions and billions to help Ukraine militarily?
Well, Tom, you have to make a difference between money that goes for weapons and money that, of course, goes to sustain financially Ukraine. And on that note, to be fair to countries like Germany, they have been slow on the weapons. Since today, by the way, an incredible interview by Chancellor Scholz with Der Spiegel, now pointing to what seems to be a real concern from the German government that this war could escalate. The German Chancellor saying, I don't want to get involved directly with a nuclear superpower. I should all keep this in mind when we think about weapons to Ukraine. But when it comes to financial help, you could argue countries like Germany have spent billions in this country, and they will have to continue to do this. By the way, the reconstruction of Ukraine, it's almost understood here in Brussels that it's Europe that's going to have to pay for it.
Maria, let's just sit on that interview for a minute, because I also thought it was fascinating. Chancellor Olaf Scholz, what was his goal there? Is it basically drawing a line with which weapons were basically escalatory that's new?
Well, I think there's two things. One is he's under immense pressure in the German government. There has been incredible criticism this week from Brussels, but other European capitals, the likes of Mario Draghi in Italy, that Germany is ambiguous still on Russia, that there is a lot of legacy from the Merkel era that still continues to drag government action, and they should be much more open in their support for Ukraine. The other big issue is that his own party, the SPD, the German socialists, have been criticized for working for years with Russian companies in the hunt for cheap gas and jobs. So this interview was a lot of saving face for Olaf Scholz and the SPD. I'm not sure it did the job, because if I look at it, what came across to me was a chancellor who's still very dubious, who's not really sure what to do when it comes with the weapons, and who is scared of Russia.
Emily, this goes to the conversation that Janet Yellen really highlighted yesterday, moving away from an immediate ban on oil broadly for the Euro region from Russia and talking about making Russia pay for the reconstruction of Ukraine. How much is that becoming the theme, finding ways to either tax this oil or imposing some sort of penalty more directly that can go toward the Ukraine reconstruction?
No, I think, Lisa, that's a really good point. I mean, at this point, it just seems like it is going to take a while for some of these European countries to really get off of Russian oil and gas. And so there is a need to think about what other ways they can wind up getting funding from Russia. You know, we heard the Ukrainian prime minister here in D.C. yesterday saying that they're going to need $600 billion, that Ukraine will need that to sort of make up for the losses that's currently sustaining in this war, and asking the IMF and the World Bank for that funding. We also do know that there is an effort being made to look into and gather data on potential war crimes committed in Ukraine by Russia, and then really hold Russia accountable. This is what the Secretary Yellen was getting at, seeing if Russia is going to be able to pay for some of the costs that it has inflicted upon Ukraine.
Emily Wilkins, always great to catch up with you down in Washington alongside Bloomberg's Maria Tadeo in Brussels. Bramo, a little bit later this morning, as you know, 11:45 Eastern Time, we'll be catching up with Secretary Yellen. Looking forward to that conversation with David Westin. Coming up, Lisa, just a little bit later.
And really, I agree with you. I'm curious what she says about oil, because right now it seems like that's a no-go when it comes to having some sort of bigger ban from Germany in particular. If that's the case, what are the other options? Is there a potential tax on oil from Russia that can then be used, those funds being used to go to Ukraine? How much does the conversation shift that way?
Well, clearly a big problem potentially for Germany. The Bundesbank coming out with their report. According to the Bundesbank, in their monthly report, Tom, the German economy at risk of shrinking nearly 2% this year if, and it's a big if still, that this war in Ukraine escalates and an embargo on Russian coal, oil and gas leads to restrictions on power providers and industry.
I would fold it into the embargo debate and the distinction between gas and oil, John. I mean, John, where in the weekend are we into the oil embargo in Europe?
France is trying to push it, Tom. Macron's got his own problems this weekend.
He's got to run for a second round vote.
Exactly. Whether they can actually get the Germans on board, I think a lot of people, Tom, still very, very doubtful that that's going to happen anytime soon.
It is April and warming in America, and of course, it's always our job at Bloomberg Surveillance to provide added value to your weekend. Let's go to that, and we do it with expertise from the left rough. And what it comes down to very simply is one of the challenges you have in the late after is losing your golf blisters. Adjust your grip, check your grip pressure, avoid the death grip. Man up, John, use a golf glove, and buy expensive golf shoes. John, you need a pair of Berlutis.
You think he doesn't have one?
Is it $15.40? Are they shoes, Tom? Are you serious?
Yes, they're
Is that how much they cost?
Yeah, they're Italian.
I bought a golf club for $20. Trying to get back into it, and it's painful. From New York City. Thanks for that, Tom. Appreciate it. Happy weekend to you too. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Live from New York City, this is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Bravitz. I'm Jonathan Ferro. Here's the price action for you on the S&P and on the NASDAQ too. Futures just a little bit softer here, down 0.4%. On the NASDAQ, heading for a third straight week of losses on the NASDAQ 100. The meta curse, the words of Bank of America's Michael Hartnett, who thinks the pain is just beginning. The rate shock equals a tech trauma, for him at least. So the rate shock continues too at the front end. We've had a move of 30 basis points on a 2-year yield so far this week, up another 7 basis points today to 275.54. So the Federal Reserve set to keep on hiking. The Bank of England might do the same, but they could be doing it into some weakness. So get to sterling, and we'll look at pound sterling right now. Cable, a whole lot weaker. The pound down by, where are we now, Tom? 1.12%.
Yeah, John, explain to mere mortals why the Bank of England has American economists on their board. Adam Posen has done that tour of duty. David Blanchflower from Wales, that's a foreign country. He's done his duty.
You're going to get in trouble.
Thank you. And Catherine Mann of MIT, who's legendary, folks, in international economics, one of my favorites, is on the Bank of England, right?
Tom, I have a lot of time for it, to bring in international experience. I have a ton of time for that, don't you?
Okay.